All right, guys. So we are here. Bank earnings. BLK did drop their numbers already. So let's take a look. NVDA stock over 900. We got Jpmorgan, Wells Fargo, Citigroup all this morning. Jpmorgan pulling back the last few days into the earnings report, but gapping up a little bit this morning. NVIDIA, though, over 900s. Again, today's really the start of earnings season. Today's really the start of earnings season. We're going to have to put some bank earnings out in chat so you guys can see them. So yeah, but like I said, today is kind of the start. Today's when all the major bank earnings start. Next week we got Tesla earnings. So there we go. What's up, Nick? All right, so again, BLK released. They posted 981 EPS, 981 EPS, revenue of 4.73 billion. Well, they originally expected 4.65. There's BOK's numbers right there. I know I'm a little late, but Jpmorgan, Wells Fargo, Citigroup, Chase, they all released this morning, so we wanted to at least get these started. We got Wells Fargo, so yeah, we got a lot of stuff that's gonna move markets. BOK is gapping up to 806 right now. Jpmorgan at 197s. NVIDIA all the way over 900. Just a crazy bull run yesterday, really. Apple, bro. I'm in Apple right now. I didn't take any profit on it yet, and it flew up yesterday. I'm just kind of looking at it. I'm in at the 160s. It's up to 170s now. What else? What else moved like this, man? So Apple, Tesla, PPI inflation data helped the market. Tesla ripped up. NVIDIA obviously over 900. Google ripping up to 160s. I'm in Google right now. I added to Google on the dip a few days ago. Looks like it was a good move. What else am I in right now? Let me see. Apple. Gold still up a lot. That's nice. PayPal up a lot too. I'm in Snapchat also. Tyson Foods, Tesla. Yeah, BLK doesn't have big like stock liquidity. Like it has liquidity, don't get me wrong. What I mean is the charts aren't really super liquid charts, you know. They're not clean charts. So BLK is one of the lesser important stocks, but interesting to see what happens for earnings. Chewy. I'm in Chewy. Did it go up? It did. Nice. Yeah, I'm trying to see if we got anything else today. I don't think we do. Import-export prices. We got prelim consumer sentiment. Bostic speaking at 2:30. So, nothing really big. Intel news from China. I bought Intel yesterday. How did that go? That's down. I would have been green on it, but it's alright. I'm not down much. It's a small position. Yesterday was so green for me outside of that, we're still doing okay. Bank earnings might have inverse correlation with Bitcoin. Maybe. Sometimes they do, yeah. Bitcoin currently sitting at 71s. We'll do a poll. Do today's. Does the bank earnings dropping this morning cause bullish or bearish market action? Are we getting lag? I don't think so. No. Okay, good. Might just be YouTube. Okay, yeah, we're good. Alright. Most of these big earnings drop at 6:55, right? We already had BLK. They had 4.1% surprise growth. Jpmorgan drops at 6:55 in about 25 minutes. Wells Fargo drops at about 25 minutes. Citigroup drops at 8, so about an hour and 5 minutes after Jpmorgan and Wells Fargo. Progressive drops at 8. State Street drops at 7:35. And then again, next week, we did get a little bit of lag, no? All right. PPI reaction was dumb in my opinion. I don't know. Define dumb. Why do you think it was dumb? Inflation data came in lower than expected. A lot of people, let me give you the argument for it. A lot of people look at PPI as a more valid inflation metric versus CPI because they say business prices are more accurate reflections over price increases than consumer prices. Now, I'm not saying I agree with that argument, but when PPI inflation comes in really noticeably lower than expected here, market can and did rip up. So no, I tend to prefer like PCE data. So are we lagging? We're not lagging, right? We're clean here, right? Exit out of some stuff here. Clean chart. Got a bunch of windows open. I probably gotta refresh this. I got way too many windows up here. My bad, guys. Cleaning things up a little bit. Here we go. All right, cleaned up. John, your experience, top 3, man. What's your opinion? Will the bull run resume today? Is it going to take more time? I have no idea. Anybody that's experienced understands that nobody freaking knows what the market's going to do, especially short term. The shorter term you zoom in to the market, the less anybody knows, right? Like the more predictable, the longer term you look at it, the more predictable it is. The shorter the term, the less predictable. And so if you're asking me what the market, if we're zooming into today and said, hey, what's the market going to do today? I have no freaking idea. Nobody does. Like nobody does. Nobody knows what the market's going to do short term in this way. They might guess it, and they might be correct in their guess, and then you got, I'm sure, some people that are going to be sleazy and act like they just know what's going to happen when really it was a 50-50 chance, right? But nobody knows what the market's going to do short term like this. Do you think UNH and Humana might recover any time from its downturn? I mean, don't they have earnings coming out soon, Arif? The earnings D are at 6:55. 6:55 market time is when the earnings drop. What's up, Type? All right. That's why I'm not answering part of this poll. Yeah, I mean, I'm asking people bull or bear, but it's really just guessing here. It's just gauging sentiment is all it really is. Lower than expected don't mean much. It still went up by, what was it, 1.1%. That's why it was dumb. Just because I guessed it right, the market rallied crazy in my opinion. I don't think it's crazy. I think you gotta look at it from this lens. All right, so like you gotta look at it from this lens. Number one, the market dipped a lot the previous day from CPI, right? So CPI came out, market dipped a bunch, right? And CPI wasn't that bad. If we're looking at the previous report versus the current report, CPI decreased, or slowed, I should say, mostly except for year-over-year CPI, right? So core CPI year-over-year, last time it came in at 3.8. This time it came in at 3.8. Core CPI month over month. Last time it came in at 0.4. This time it came in at 0.4. Core CPI year over year, again, was flat. CPI month to month. Last time it came in at 4. This time it came in at 0.4. So the only one that increased was CPI month to month. So it was pretty much flat month to month, and the market dumped a lot from CPI. Like the market dropped a lot. Number two, with PPI yesterday. Right, with PPI yesterday, PPI decreased reading to reading. So again, except for year over year PPI, which is the least important and the less relevant reading, right? So the month over month, which is the most important one, if you look at like the popularity gauges and you look at what's the most important metrics versus the least, the year over year is the least important on PPI, right? The month over month PPI decreased or went down month to month from 0.6 to 0.2%. Now, very rarely is inflation ever literally going to go down, right? The best we can hope for is that it slows down. That's just naturally true with inflation data, right? Inflation's not, prices aren't really going to drop like that. They might slow down though. The rate at which they increase might slow down, and that's the best we can hope for. And that's always been the same. It's never been different than that. But again, when we look at it under that lens, PPI, they expected 0.3. We showed 0.2. For year over year, where they expected 2.2, they showed 2.1. Month over month decrease from 0.6 last month to 0.2% this month. That's a big decrease, and that's an optimistic thing, as well as the extension on the downside for markets. Like the market was so extended on the downside, a bounce back was probable, I think, just because, you know, it was down so much already. You know, the market was down so much already. It's not a surprise to see it rebound back up and be kind of flat over these reports, you know. So CPI showed up again. Like, look, CPI showed up on the 10th, right? So CPI showed up here, dumped all the way back down. PPI showed up positive. We basically just rebounded, and we're really flat from this report. The only thing that's bullish is NVIDIA. The only thing that's really like green, net green since CPI is NVIDIA, right? So here's the drop from CPI. Here's the bounce back from PPI. So really, again, the market's in kind of like this neutral, flat level over the last few days. Is my point, I guess. Yeah, we'll keep the SPY up right here. But again, the SPY's flat since CPI. SPY hasn't done much. Really, it's down a little bit, if we're being honest. All right, guys, we got BLK coming soon here. I know BLK's already out. We got Citigroup, Chase, Wells Fargo dropping soon. Soundhound up a lot yesterday too. That's nice. We're still red on it, but look better at least. Do you think the NASDAQ 100 is going to drop today? I have no idea, guys. Nobody knows what the market's going to do short term. Nobody knows. Market can go up, down, or sideways. Nobody knows what the market is going to do short term. These are the most common questions I get. Nobody knows, man. Like, again, nobody knows. All you can do is react. You can watch what happens at the opening bell, watch what happens in the first 5 minutes, see if we break under major support, major resistance, see what the major levels are, and then try to play off of those levels. That's the best you can hope for. You're not going to be able to really consistently predict what's going to happen short term like that. You know, technical wizards might argue you can. I disagree. I disagree. No, bank earnings are not out yet. We got Jpmorgan dropping in about 13 minutes. Wells Fargo dropping in about 13 minutes. Yeah, all good, Fate. No worries, man. Let's check out X this morning. It's good to see we got some Office fans in here, okay? I made this post yesterday. If you ruin this market, I will burn this office to the ground. And I mean that figuratively, not literally, because you guys are so important to me. I love you guys, but don't cross me. But you're the best, you know? You love The Office. I love The Office, man. It's my family's favorite show. We watch it all the time. First 30 minutes and last hour is the most important. Yeah, probably. Same, but even though your tech analysis fails 50% because of a breakout to the other side of news events. Right, well, it just depends, like, fundamental stuff trumps technicals, right? So you can have the best technical pattern ever. If you get a big economic release like CPI, PPI, PCE, FOMC decisions, it completely cancels out most technical moves, with the exception of maybe some extension. Like understanding, like if we're really extended on the upside or downside heading into CPI, that might influence how much CPI influences everything else. But again, fundamental catalysts are going to have such a much more powerful influence over price than technicals will. You know, technicals, like when you get a reaction to technicals, usually it's slow and steady. When you get a fundamental reaction, it's big and broad and whipping, you know, so like it's just a difference. You know, and I think technicals are incredibly useful, but I also think that a lot of people label things technical patterns that aren't. You know, again, I used to have a guy that every time CPI would come out, he would say, "Oh, that wasn't from CPI, bro. This was from the 23 SMA and the 9 EMA crossover, bro." And I'm like, dude, like that crossover would never ever cause this much volume. It would never cause this much price, like this much fluctuations in price. Like that crossover would never do that. And so yeah, technical traders sometimes see things that aren't there. All right, chat. Still waiting. We got 10 minutes, technically, until Jpmorgan, Wells Fargo. Here's Jpmorgan on the right side at 197s. NVIDIA's up to under 900, or now under 900 again. But we also have Wells Fargo dropping. We have Citigroup dropping today as well. Look at my reversal indicator, bro. Check it out, dude. Look at the strict reversal indicator right here. Called the literal bottom. You love to see it. Yeah, I prefer to wait for the catalyst and see what market does before putting tech. Yeah, 100%. I mean, I'm one of those guys I'm a natural skeptic. And so if somebody tries to label something that's not a technical move, I'm skeptical usually. And I'm looking at other reasons for the move to happen outside of the technical reason. You know, and again, there's some real technical wizards out there that are just way better than me. And so I'm not hating on technical traders. I'm really not. I like technicals. I just think you have to look at both sides of sentiment. You have to look at technicals, you have to look at fundamentals, and you put them both together and you get the appropriate answer to what's going on. If you look at just one side of it because you're too biased to technicals, you're missing fundamental pops and moves and breakdowns and stuff like that. If you're looking at only fundamentals and not technicals, you're missing different technical nuances as well. So I think you just got to look at both sides and be smart, like be balanced, like look at both sides, not just technicals, not just fundamentals, but both, and understand what's going on. And I think technical patterns can be powerful. Like you guys see me, I love the 200 EMA VWAP previous closing price combo. Here's Wells Fargo. I don't know if they're out yet, but they just dropped a lot. Let's see if they're out. Wells Fargo, it did just come out. Wells Fargo posted 120 EPS versus 111 expected, revenue of 2.86 billion versus 2.2 billion expected. So ultimately better than expected all the way around for Wells Fargo. But they are down. Jpmorgan just dropped as well. Jpmorgan just posted 444 EPS versus 415 expected, revenue of 42.5 billion. So Jpmorgan and Wells Fargo are out. Here's both of them on the screen right now. Here's both of them on screen. Again, you can see JPMorgan dropping a lot down to 191s. Wells Fargo originally dipped to 53s, is back up to 55s here now, chat. But bank earnings did just release. Still waiting on some other stuff here, but bank earnings are out, chat. Both of them did better than expected on EPS and revenue. Wells Fargo 120 versus 111, revenue of 20.86 versus 20.2, so better than expected both. JP Morgan, same thing, 444 EPS versus 415 expected, revenue of 42.55 versus 41.85, so higher than expected universally here. We'll see if these influence the markets. JP Morgan's definitely reacting more negatively, and it's also decreasing. Like, again, some people might argue that this latest SPY move, like an example of technical people doing that, is you can see the SPY break down. What the SPY is breaking down because JP Morgan's breaking down. Like, one of the biggest banks in the world is falling, and that's dragging this market down, right? But again, if you got a technical guy trying to label everything technicals, they're going to say, nah, bro, this is because this support level broke this or whatever, when it's obviously bank earnings, right? Bank earnings dragging it down, Wells Fargo falling, JP Morgan falling, and you can see the accompanying response in the SPY. So but yeah, we got the bank earnings on screen. Bank earnings are out. Nah, the 18.7 EMA crossed the 27.2 SMA. Yeah, bro. I know, dude. Listen. Technicals, bro. Alright, guys. Hey, we got bank earnings are out, dumping the market back down, although the market can kind of handle it today because of how strong it was yesterday. So the MACD did it. Yeah, we got University of Michigan sentiment, but it's not really like a crazy big report, you know. Citigroup drops. It's at 8 a.m. scheduled. Man, look at the stock market turn. Again, this is specifically obviously from bank earnings. Right, so bank earnings are down. Wells Fargo is dipping but rebounding. JP Morgan is really falling. So big bear action from banks. And see if we continue on this downward trend here, chat. I'm watching banks. I'm watching BOK, Wells Fargo, Jpmorgan, especially after the opening bell. Are the bank earnings bad, and why does it plummet? I don't know. Probably extension. Jpmorgan's up a lot heading into this. So again, this is the one exception for technicals that I use. Like if we have deep extension heading into it, that can influence the reaction. It's probably more stuff than that, though. Like this probably has to do with... like, look, let me break down Jpmorgan numbers. So Jpmorgan posted first, this is not just technical extension. It's mostly their actual numbers. So again, I'm going to break down Jpmorgan's numbers here. First quarter end book value is at 106.81. First quarter consumer and community banking revenue at 17.7 billion. Non-interest revenue for the first quarter at 19.3 bill. They get EPS at 444. Corporate investment bank revenue at 13.6 billion, net revenue at 13.4 billion, assets under management at 3.6 trillion, non-interest expense at 22.8 billion, commercial banking revenue at 4 billion, return on common equity at 17%, assets under management up 19%, revenue on a managed basis at 42.55 billion, and revenue again at 41.9 billion. So this probably has to do with these numbers that the market's not really liking here. So again, again, it missed, or it's reacting negatively. I don't know. It didn't miss. It's just reacting negatively. We'll see what the rest looks like moving forward. All right, so Jpmorgan says, looking ahead, we remain alert to a number of significant uncertain forces. I don't think that's necessarily good here. Yeah, I mean, look at Jpmorgan with the earnings. Like, look at them going into earnings. Again, the exception with this is the technical exception is extension. Like, look how much Jpmorgan is up in earnings, or not just in earnings, but into earnings, but the whole year alone, the last 52 weeks. It's up a lot, you know, like look at this for Jpmorgan. It's up a bunch. So, I mean, it's not a shock to see it, you know, you have to understand with stuff like this, people get front loaded into these moves, right? So people are already betting on, good earnings. They're riding it up. They're taking profit on this big bounce, you know, or on these, on this run into earnings, you know, is what it is. But yeah, Jpmorgan's up a lot. SPY finally down to 515s. Pull it back some here. Yeah, so again, we also have Citigroup dropping. Wells Fargo, a little bit more underwhelming reaction here. All right, so again, the Jpmorgan CEO says that we have never truly experienced the full effect of QT on this scale. The full effect of quantitative tightening on this scale is what he says. Do you guys agree? Basically, if you don't know what QT is basically the bank stepping in. Now, it's a more desperate move. Like, the bank can raise or lower interest rates if they want to keep interest rates high. They can raise interest rates. They can raise the federal funds rate, which is short-term interest rates. Eventually, it'll trickle into long-term rates. And so the Fed can do that if they want to keep interest rates high. If they want to bring interest rates down, they can cut the federal funds rate. But a more desperate decision in these parts is something called quantitative tightening. If you want to bring interest rates up, if you want to push interest rates higher, you can do what's called QT. What QT specifically is with QT, the Federal Reserve steps in and they buy up a bunch of bonds, right? They buy up a bunch of bonds. They expand their balance sheet. They step in, they stop buying bonds is actually what it is. So QT is when the government doesn't buy up a bunch of bonds and instead lets their current holdings mature and expire. That is what QT is, quantitative tightening.
What it does though is it keeps interest rates high because it takes liquidity away from the market. When the big bank isn't coming through and increasing and helping the balance sheet and expanding their balance sheet and injecting liquidity, what happens is that banks have worse margins and they keep interest rates high to compensate for it, right? So that's called quantitative tightening. One of the consequences of QT is that it can cause financial disasters. It can keep interest rates high for so long that banks struggle. Not the Federal Reserve, but other banks struggle. Businesses struggle because interest rates are high. Mortgage and lending businesses struggle, and in turn, business dries up because of it. And so, but again, what it does do, like one of the benefits of it, is that it curbs inflation. It helps inflation, right? So QT helps inflation, but also potentially causes economic risks. QE, which is quantitative easing, is when the Federal Reserve steps in and buys up a bunch of bonds, expanding their balance sheet, injecting liquidity into markets, and this ultimately helps save the economy. So it's the opposite of QE. It ultimately helps save the economy. But one of the risks, again, is that it causes inflation, right? Now, these are more desperate moves than just simple rate decisions by the Fed. The Fed can... it's just desperate moves by the Fed. More desperate moves. I'm not going to say it's like purely desperate. It's certainly more desperate, I would say. It depends on which banks, It's really the reality. It depends on which banks. Yeah, it really just depends on which banks. I'm definitely not playing poker on the other screen, guys. All right. We got 400 people here. Bank earnings are out. Jpmorgan had an underwhelming reaction. All right, chat. All right, so we did get a little bounce back up. Jpmorgan testing these lows. All right, chat. Let's see if we get a bounce in Jpmorgan. Your typing skills on point. Yeah, I mean, we appreciate it. But definitely top 3 best typers in the world right now. But no, high interest rates do benefit banks. Sorry, I'm playing a little bit of poker on the other end. High interest rates definitely help banks because obviously banks make more money. But depending on which sector of business it is, they can also dry up business in a lot of ways. Like it's nuanced. Logging into Coinbase for the first time in a while. Did they guide lower? I don't. Let me see if they put out any guidance. I don't see any guidance really here. So they said a couple things. They said, quote, "We have never truly experienced the full QT effect on this scale." Jamie Dimon said also, quote, "We must prepare the firm for a wide range of potential environments to ensure that we can consistently be there for clients. Looking ahead, we remain alert to a number of significant uncertain forces." So basically a little bit of a, I would say I'm not going to say a bearish view or a hawkish view, but he's definitely not the most optimistic dude ever, you know. All right, chat. I don't know. I have to find the chat. Nope, that's not my right. I got old numbers here. All right, so again, Jpmorgan CEO came out with some, I would say, argue bearish look. The next numbers that we have dropping today are specifically from Citigroup. We have Citigroup numbers today. Citigroup expected at 8 a.m. Progressive expected at 8 a.m. 7:35 for Progressive. Yeah, hold on. I'll get to some of these questions in a second. It depends on which banks, again, frequency. It's not just one size fits everything. He said, frequency said higher rates don't help banks that are paying high interest rate for mortgages. They sold at fixed rates. Right. Again, it's nuanced, but that's accurate. It depends on which banks and who it is. Interest rates in general are good for banks, high interest rates, but it also, there's a correlation of like business as well, right? The higher interest rates are, it depends on what kind of bank. Mortgage banks, not really, because because there's certain industries where you're going to get loans regardless, and mortgages are that to a certain extent, but the higher interest rates are, the less likely people are to get mortgages, and so individual mortgage brokers, their business is dried up. I've known a couple people who did really, really well in 2020, 2021, or before interest rates spiked, before the Fed came in and raised rates super aggressively. After the Fed stepped in and did QE and brought interest rates down to almost zero, I know a lot of mortgage people, because I do have my real estate license, right? But I know a lot of mortgage people that did really well in that period of time. And they kind of, I know one guy that like made a bunch of purchases expecting it to just continue like that, right? But he didn't really understand economics. So like the Federal Reserve stepped in and then raised rates really aggressively and brought interest rates really high, right? So then what happened to, all the income that they were making dried up because, again, interest rates spiked. It's really hard to sell a mortgage to somebody if interest rates are at 8%. Like, you might still get people that want one, but it's certainly not as much people that want one when it was down at 2.5% or 2%, And so now, like, he's in this big expensive house that he can't afford and like all this stuff, and honestly, one of them got kind of weird with me and just out of just bitterness and jealousy, just insecurity, so misery loves company. But I digress. Back to the point. The point is, interest rates are high and all banks don't love it, All right, chat. We did get a spike in, or not a little, maybe a little spike, you could argue. Jpmorgan beat revenue. Jpmorgan came in better than expected for EPS sales, and all that good stuff. But they just they had a negative reaction because some bearish views. I think, you know, I don't know Jamie Dimon, what he's really trying to do. I think you know, sometimes they can get in a little bit cheaper, I guess, is probably what he's doing, right? So he might be trying to bring the price down intentionally based off of what he's saying. Because if you look at what he says, again, we must prepare for the wide range of potential environments. We have never truly experienced QT on this scale. We were uncertain forces. We remain alert to a number of significant uncertain forces, stuff like that. So, I mean, he is... He's big broad, you could be right. Yeah, he might be trying to get the stock down. Yeah, I mean, I'm okay with him being like that. I think they're up enough to where the stock can handle it. You know, the stock can probably handle it. They're up a lot. I don't think consumer sentiment's super big influence. So I don't think consumer sentiment. We have University of Michigan consumer sentiment today. It's not a huge report, to be honest. All right, so we are dipping down a little bit here. Wells Fargo at 55.75. So good results on earnings. Good is subjective. The dollar is rocketing. Well, the dollar's probably pushing up because equities are going down. Wells Fargo's still doing okay, though. Wells Fargo's still doing okay. And I'm in Citigroup. I wonder if I should tread carefully here. I'm up a decent amount. Actually, we're in Citigroup. We are. What? Any other bank stocks that I'm in? Let me see. So far. So we do have Citigroup dropping today, chat, too. Yeah, BOK already dropped earnings early this morning. So BOK's already out with their numbers. We'll put the numbers up on screen. But yeah, BOK's out. BLK posted a bunch of good stuff. They posted good EPS of 1040s, adjusted EPS of 981. Here's BLK's numbers right here. All right, so we got about 500 people here already, which isn't bad for 6 a.m., 7 a.m. market time. Hey, thank you, Ron. Or no, thank you, Andre. Sorry. I don't know how much that is. What is it? $10? You said, yeah, Ron. I gotta always look up how much this is. That is $2.14. Thank you so much. I appreciate it. Andre, my guy, thanks so much. I missed it. Why did the market dump? Technicals or fundamentals? The market dumped from bank earnings. So it's a little bit of both. It's a little bit of both. So like, hold on one second. So again, Wells Fargo at 55.80s. So basically, Jpmorgan posted better than expected EPS and revenue, but it's down, right? Basically, probably because of extension on the upside. So it's a little bit of both, I would say, is why the market's down right now. All right, so again, Jpmorgan is down. Oh, sorry, I forgot to answer the super chat. Opinion on United Health. I don't know a ton about United Health, but it's very strong. My bad, super chat guy. United Health is one of those companies that I don't really like. It's a very strong long-term chart. Okay, very strong long-term chart. But yearly chart's pretty weak right now. It might be a good dip buy in all honesty, but it was up a ton. But here's the weekly chart. So the long-term chart is incredibly strong. You know, in 2020 it was at freaking 250s. Now it's at 440. So very strong, very strong. So again, this is United Health. It's the United Health Group. It's a health insurance and services company. So yeah, I mean, it did really, really well. But the last year, it's a little rough. But again, it might not be a bad dip buy. Let me look at what the PE ratio is, right? It really depends on what the PE ratio is. I'm not telling you to buy it. I'm not telling you I'm not telling you to buy it. I have no idea if you should buy it or not. I'm just trying to look up the PE ratio real quick. So give me a second. I'm gonna calculate it myself here. So the price is at 442s. 442s. All right, so United Health Group, UNH, their last earnings were 664. Wait. Yeah. So their next upcoming one is expected at 64. Their last one was at 598. So let's calculate this. All right, so look at Wells Fargo popping up. So again, so let me calculate this PE ratio myself. I know somebody's probably already given it to me, but so again, in January they posted 6.16 EPS plus 6.56 plus 6.14 plus 6.26. So pretty consistent revenue is the first sign. Optimistic sign. So 25.12 EPS, 25.12. And so they have a PE ratio of 1750s. Not a bad PE ratio. So again, not a bad PE ratio. All right, chat. So a pretty low PE ratio for United Health. I don't know, man. I might have to buy it up a little bit. It doesn't look bad. Again, I'm not telling you to buy it. I don't know what you should freaking do, chat. See what you guys are saying about UNH. What are your favorite beer? I'm not really a big beer guy, but I like what's the moon one? Blue Moon. I like Blue Moon, you know. I'm pretty easy. I like Coors Light, you know. When I drink beer, I'm pretty easy. John, do you think the Dixie or DXYZ is a penny stock? I think it's a crazy volatile. Gold has been on a tear. Yeah, I mean, DXYZ, crazy movements here. Over the last, like, IPO day. So here's Dixie, or DXZY, or DXYZ. Again, just absolutely ridiculous moves since IPO. Here it IPO'd at 825s. It went all the way up to 105. It's now back down to where it's currently sitting. It's now at 47s. So it's a pump and dump is probably what this is. Although it is an IPO, so maybe not. Anyone get info on the import price index? Does it influence markets? No, it doesn't influence markets nearly as much as like CPI, PPI, or anything like that. It's a very small report. Today's report is just insignificant in terms of at 8:30. The 8:30 report today is just really small and doesn't really mean much at all. We got Bostic speaking today, but yeah. So like today's report, it's nothing. It's not going to move markets. Not really going to do anything. I mean, we'll cover it. The University of Michigan numbers could cause some interesting movements too, but. Mad at you today. All right, guys. So we are back. Sorry, my daughter was in here talking to me. Will the Tyson fight bring Netflix up? I don't know. Maybe. Netflix is up so much already, though. I might buy United Health a little bit here. I might buy, you know what? I'm going to go ahead and do it. It's down so much on the year. It's got a low PE ratio. Yeah, we're going to buy it. Let me see. 20-day chart's down big. I'm going to go ahead and buy it. Wait. Earnings come out soon is the problem, right? So that's the only thing I'm a little nervous about is earnings here. You know, earnings. Let me wait. I'm going to wait to buy it just because we do have earnings for United Health that show up next Tuesday. So next Tuesday, United Health has earnings. I'm going to wait until earnings come out. I'm not really a big fan of buying up stuff pre-earnings. You know, I might, yeah, I'm not a big fan of buying up stuff pre-earnings, so we'll wait. Yeah, I know the company faces the antitrust probe. I'm not really worried about that, per se. You know, I might buy up small shares. I'm going to buy... It needs to be a small share size, because this is a fast mover. We're going to buy up a small share size here of United Health. And just kind of hang out. So we bought United Health a little bit. And XPO. I lost a lot gambling on earnings. Now I just do long term. Well, I'm doing long term. Again, I'm not really trying to gamble on earnings. I'm just buying it up long term. And if it gets fluctuated from earnings, it's all good. I'm taking small enough size to where I could also DCA into it a little bit more after earnings as well. Kind of try to curb that a little bit. Unless it's really green, you know. SPY looking a bit choppy. Yeah, I mean, again, it's a Friday. Bank earnings dropped today, decreasing the market some. Wells Fargo out. Citigroup's the next one to drop. That's big. Citigroup's right here at 60.30. Still not out with their earnings yet, but we're waiting for them to show. ExxonMobil says it's moving forward with Whiptail Guyana project after receiving Gov approvals. Production target to begin in 27. You know what? I'm actually going to decrease the position I just took. I just sold a little bit of my United Health. I don't trust it, to be honest. I'm still in a position, but it's a smaller position. Bill Ackerman. Or Bill Ackman. I like Ackman, man. Everybody hates him. I don't know why. I like Bill Ackman. I think he's smart. When are earnings dropping? For what? Citigroup's scheduled to drop at... Citigroup's scheduled for 8 a.m. on the dot. We do have State Street and Progressive dropping. State Street dropping at 7:35. Progressive at 8. Citigroup at 8. Wells Fargo, BLK, and Jpmorgan out already. Are you thinking about NVIDIA today? Well, NVIDIA is interesting. I think NVIDIA, you know, NVIDIA has originally... NVIDIA did rebound yesterday. It's back over 900, which I think is a good milestone level. And I think if 900 can hold support, that's even better, right? So I think if 900 can hold that major support level, that's good. Yeah, we'll see. It's time, guys. I'm ready for it. We are at a day trade. We had a really good day trading yesterday. Really good day trading yesterday. Nice little green action here. Grinding it up in the accounts that we're in, and just kind of build up that profit here. So we'll see if we can get another one today. We're gonna start to day trade a little bit today as well. We made some money yesterday. We're gonna see if we can make some money today. Slow and steady wins the race, chat. So that's what we're trying to do. And in terms of account balance, we're building it up too. We're really nicely green on our 50K combine. Now, we've mostly been trading. We haven't traded any other account over the last, like, couple days. So let's see what we get here. Wells Fargo still looking pretty resilient, though. Wells Fargo did pretty good. They came in better than expected EPS, better than expected revenue. All right, guys. Sorry, talking to my wife. All right. Anyways, we're gonna get ready to day trade. Look at Wells Fargo spike it up a little bit here, chat. So Wells Fargo spike it up. I might, we're getting some rebounds in stocks. We are getting some rebounds. Let me see if State Street is out. State Street's reporting earnings today. That might help other bank stocks. Let me see what State Street is talking about this morning. Let me see. Wow, Lululemon has dropped all the way down to 350s, man. Like we used to have people argue with me about this stock. And again, I'm not saying it's not a good stock, right? I'm not saying it's not a good stock. Like what I'd say, again, people get so emotional, man. And you got some people that have like personality disorders, I guess is the easiest way to describe it, because like if I don't agree with every stock pick they have, they turn into like a huge weird hater. And Lululemon is one of those ones where people disagreed with me in the past about it. And I'm not hating on Lululemon. I think Lululemon is a money-making machine, man. They make so much money, right? The problem is that when you bet on companies like Lululemon long-term, it's risky. Why is it risky to bet on Lululemon long-term? Because they're a pretty new company, right? They haven't been around for 30, 40 years, right? Like Nike or other legacy fashion brands. Fashion in general, when you're talking about investing in fashion in general, it can be incredibly risky, because fashion brands typically change generation to generation. Like if you think about children, like I have kids, right? Kids don't really want to wear the same brands that I wore. They might even dress exactly the same as I did. They don't want to wear the same brands that I did. They don't want to listen to the same music that I did. They don't want to wear the same clothes that I did for the most part, except for maybe this latest generation, but that's an outlier. Point is, fashion and trends change. And so investing in a fashion company long-term, like 20, 30 years, is a risky bet. Because again, a lot of fashion brands, trends change, generations change. They want different things. They want different products. They want different stores. And so, yeah. I mean, I know Abercrombie & Fitch has got this resurgence, but there's nobody ever in there outside of like the squeeze. But if you look at the clothes that were popular when I was young, Hollister, American Eagle, they're almost all about to go bankrupt or have been bankrupt before. And so investing in fashion brands long-term is risky. The other side of that, I think Lululemon is one of those companies that it's kind of established now. if it keeps up with the trends, it could succeed. It's just a little bit too vulnerable for me to that type of competition, trend changing, fashion changing aspect of it. So it's just not a company that I want to put money in and park money in long term. I think there's a lot better options with a company that is way up there to $500 a freaking share a couple months ago. I think there's just way better options than Lululemon, despite how good they do now. Well, Nike's going to be powerful no matter what, but that's a legacy fashion brand. And if Lululemon can turn themselves into that, that's great. You know what I mean? That's great. That's great if they can turn themselves into a legacy brand. That's awesome, right? But again, that's a big if, and Lululemon's still too young for that. Lululemon really got big in 2020 when the pandemic happened, and the kind of leisure wear style picked up, right? Leisure wear style, people started wearing sweatshirts and sweatpants everywhere because they were at home for the pandemic, right? That's when companies like Lululemon really started doing well. They were there before that, but that's what really kind of put them over the top to where they went up to $500 a share. It's arguable that they shouldn't justify that price based off of some other factors, but again, it's a big if. I like Lululemon, right? It's really easy to make it super definitive and polarized and binary, where I either love Lululemon and I want to invest in it long term, or I hate it, right? Neither of those is true. I think Lululemon makes tons of money. I think parking money there long term is risky. And again, time will tell. They've dropped from 500 down to 350, a very big percentage drop. They've essentially dropped, again, a very big percentage drop. And, they've dropped over 25% in a couple months now. So, very risky, very risky. They've been basically falling since 2023. Polo Ralph Lauren is still popular. Sure it is. 100% it is, right? But again, that's a legacy brand. Lululemon's not that. They haven't been around long enough. Again, State Street posted 137, missed EPS at 150, revenue of 3.14, expected 3. So beat revenue, missed EPS. All right, guys. So again, we got State Street. Now we just have we've got Citigroup dropping. Citigroup dropping at 8:30 is what it's scheduled to drop. And again, listen, I have 2 female family members. I have a wife and daughter, a 14-year-old daughter, right? A teenage daughter, and a wife that's still pretty young in her 30s, right? And so, they both freaking love Lululemon, bro. I go to Lululemon. I want to buy if I want to buy a freaking baseball cap from Lululemon, it's like $150, dude. Lululemon is taxing the heck out of people, bro. They are charging so much money for their clothes, right? And again, I truly believe it's kind of like some people are going to feel personally attacked by what I'm about to say. I truly believe it's a placebo effect. I truly, genuinely believe it's a placebo effect. You go in there, and I think they've designed it to be this way. You go in there, and the reps tell you how comfortable the clothes are. They're like, "Oh yeah, look at how comfortable these clothes are." And so you're thinking about it more. You're like, "Oh, these clothes are more comfortable than normal." You put the clothes on, and you're like, "Oh, it's so comfortable." It's not. It's the same. It feels exactly the same as another pair of shorts from Walmart, right? But yet they're like, "Oh, it's so comfortable. Feel how comfortable these clothes are." It's a literal placebo effect. And so they're using a placebo effect to charge crazy high prices, and people are just eating it up, right? They're just freaking eating it up. I think it's funny. I have some Lululemon clothes though. My wife shops there. She buys me stuff. I buy them stuff from there. That's what they want. That's fine. But I'm not saying they're not somewhat more comfortable than other clothes, but it's not by the big margin that everybody claims it is. Again, they're just they think about it more, because when you put on a normal pair of shorts, you're not thinking about, oh, these are comfortable or not. You're just kind of throwing them on. So yeah. No, don't leave, bro. Dang, man, you left already. Please tell me you changed my phone number. Oh my gosh, dude. The dude left. Oh my gosh, bro. Come back. Dude, come back, man. He disappeared for like an hour and then...
bro. Come back, dude. There we go. Why did the market come back down? No, listen, I buy my wife Lululemon stuff all the time, you know. My daughter spends $500 a visit at Lululemon. Yeah, man. Again, they're taxing from placebo effects. Everybody's like, "Oh, it's so comfortable." I mean, it's kind of comfortable. Is it? You know, again, these new generations are sold on stuff really easily. I think, you know. By making a recovery. Yeah, Wells Fargo back up. Again, Citigroup, we're still waiting. State Street. Didn't really react. Is this State Street? STT, sorry. So, no, this is not. STT is State Street. They're up a lot, man. Again, they had good earnings, good EPS. Or they missed EPS, beat revenue. I agree with buying puts on Lululemon. It's too expensive. People cannot afford it. I'm not telling you to buy puts because, again, Lululemon's already down 25% plus in the last couple months, right? So Lululemon has dropped from 500 down to 350s already since December. And so I'm not really trying to buy puts on Lululemon. It's approaching the 200 EMA on a long-term chart, on a weekly chart. I'm not really trying to mess with that, to be completely honest. I'm just not really trying to mess with that. I think I think it's risky to buy puts right now because I think it depends on how long the puts are. But I think NVIDIA, or I think it's already down 25% plus in three and a half months, right? So I'm not trying to play with that. It's too extended on the downside. I just think long term, I think you shouldn't treat this like it's the S&P 500 because I think the risks when you invest in anything, you have to question what's the total risk of failure. So if I invest in Lululemon, I have to ask myself, yo, what is the risk that this is going to go down 80%? 50%, 60%, 70%. And I think with something like the SPY, something like the Q, something like Apple, Amazon, stuff like that, Walmart, I think there's very little risk of that happening without rebounds, right? Outside of like stock market crashes, But with Lululemon, the risk isn't that low. I think it's still very risky for that type of thing if trends change. Again, the easiest way I can look at it is like American Eagle stock. American Eagle stock, right? You look at American Eagle stock and you zoom out. I mean, American Eagle stock actually isn't that bad, realistically. Just because prices had fluctuated so much. American Eagle stock went from 27 cents and 96 all the way up to 30-something dollars in 2007. And then it fell all the way from 2007 down to 2009. It dropped all the way down to under $10, and it really stayed under $10 for a long time. It's still under $30. It never came back from that. So again, that's the best example of this, where fashions change, and I don't think the risk is super high. I just don't necessarily like investing in Lulu. Mahogany John. Hey, that guy, can you give us your thoughts on Globe Life and the fact it dropped over 50% because of fraud? I don't know anything about Globe Life, brother. I appreciate the donation, though, bro. I truly appreciate the donation. Yeah, I just don't know anything about that company, brother, So, again, I can look it up. Globe Life. What's the symbol? GL? Yeah, I mean, it's down a lot. Down a lot. I don't know the news on this. I didn't really see this news, brother. I'll check it out, though. Let me look.
Globe Life rebuked short seller. Was this a Hindenburg short report? Did a Hindenburg report come out for Globe Life, or was it another short report? Yeah, so they had a short report. It dropped 55%. I like buying stuff up after pullbacks like this, but it's super, super risky. Globe Life rebuked short seller allegations. All right, so Fuzzy Panda said earlier it had a short position in Globe Life and alleged that the company's executives disregarded wide-ranging insurance fraud while receiving funds in an undisclosed kickback scheme. That sounds sketchy. Who said this? Again, Fuzzy Panda. Freaking names on social media. Where's this dude, Fuzzy Panda, at? Alright, here it is, GL. Okay. Uncovered extensive allegations of insurance fraud. Proof management knows and has not stopped it. Sales agencies known to have committed insurance fraud accounted for over 200 million of AIL, ALPs. So GL down a lot. I don't know anything else about this. It looks really sketchy, though. I would just be very careful. I would just be very, very careful. All right, guys. Hey, we got Citigroup dropping earnings pretty soon here, chat. Citigroup dropping earnings pretty soon at 8 a.m. Talking about my typing skills, bro. Listen, I got the top typing skills in the world right now. Top 3. Let me see if I can beat my previous record. It really, I'm at the whim of these typing tests here, because my previous record was like it was like 95 words per minute. Okay. Crocodiles, bro. They're hitting me with crocodiles. Dinosaurs. Oh my gosh, dude. It hit me with dinosaurs? Oh my gosh, bro. How many times are you going to say dinosaur? Pesaurus? What the heck is this? Disappointed. Oh my gosh, bro. Oh yeah, this is easy? Oh my gosh, dude. I'm so frustrated, dude. You're going to hit me with chocolate and dinosaurs? See, man, this would have been so much higher. They just hit me with a really freaking difficult one. I'm gonna have to retake this test. I'm gonna have to mute it because they will hit me with some dumb ad. Yeah, now it says 75 words per minute. I actually can change a spark plug. Pretty easy to change a spark plug, dude. I'm actually a car guy. Like, I used to race and tune, mostly JDM stuff. Like, I had a Honda Prelude with a H22 4-cylinder motor with VTEC. I used to love racing that thing, man. It was so much fun. You know, VTEC is valve timing electronic control. It keeps the valves open a little bit longer, sprays more fuel into the motor, gives you a little boost of energy. Really fun because it kind of feels like a turbo is spooling up. And I would always trick my friends because I had a cold air intake that would kind of whistle and it would almost sound like a turbo was spooling up. And I'd put it right to where VTEC kicked in at, like, I think it was like 3,500 RPMs, and I'd just floor it, and it would, and everybody would be like, ooh. Nowadays, a freaking EV truck would smoke that car. But, you know, this was back in the early 2000s, mid 2000s. So. It's not a turbo. It definitely wasn't a turbo. I wish it was. But it also doesn't blow your motor like a freaking, turbo can. You know, I had a friend who really didn't know much about cars, right? He bought a 240SX. He put a Sylvia motor in it. And, you know, I tried to tell him. I was like, yo, you can't run 30 PSI of boost, bro. Like, you just can't run 30 pounds of boost. It's just not going to work. Your motor's going to blow, dude. And he was like, nah, bro, the Sylvia can handle it, bro. And I'm like, no, it can't. You know, nothing can handle 30 pounds of boost. It's just not going to work. Your motor's going to go. And he was like, nah, bro, the Sylvia motor can handle it. And I was like, all right, dude. And then eventually, like 2 weeks later, his whole motor was just done. You know, he was one of those guys that can never be told anything because he always knows better. You know, maybe top 3, you know, people in the world right now. But yeah, I tried to tell him. You know, I try to tell them. All right, chat. Oh, I forgot to unmute my music after. Superchargers are cool. I like them a little. I'm a little biased towards turbos though. All right, chat. We got Citigroup dropping their earnings really soon in like 5 minutes. But yeah, I'm a little biased towards turbos though, just because I know like turbos have to spool, and so you get a little bit of worse like torque from turbos than you do from superchargers, and I understand that argument. But turbos they have a special place in my heart, man. You know, like turbos are just fun. You know, no, they're just fun. Right now, I have a twin turbo V8. I'm not gonna say what kind of car it is, but it's really, really fun to drive. I was teaching my wife about what it means, like turbo spooling up, like what all of that means, and how to really have fun with it. You put it at like small RPMs. You put it at like a roll. And then you put it right where the turbo spools up and floor it, and you just get pushed back to your seat. It's fun. No, that's actually wrong, Abe. But it's alright. Out of curiosity, where are you getting all this info so quickly? Because I'm the top 3 greatest news reporters in the world right now in stocks, bro. You should have known this already, man. I'm not going to give up my sources like that. No. I wish it was Drake. John, if you had a Cybertruck, what color would you have it in? I don't know. I saw a black one the other day. I like the black ones. The black ones are fun. You are good, I admit it. Oh, dude, listen. We're the best ever in the world. For sure. Top 3. I'm surprised you learned cars, too. I was a car nerd when I was growing up, man. Listen, I grew up, okay, when the first Fast and Furious movie came out, I was a teenager, right? And so that movie influenced me a lot, right? So, like, my favorite cars growing up were, like, 300Zs. Like, I really wanted a 300Z. I wanted an RX-7, even though in hindsight it was rotary, and I would be completely oblivious to how to work on it. Or not oblivious, I would be completely ignorant on how to work on it because it's rotary. But I wanted a Toyota, a twin turbo Supra, like old tuner cars and JDM cars were my favorite growing up. Again, I grew up, I was a teenager when the Fast and Furious, the first one, came out. And the first one, I've said this before, was realistic to tuner culture. Right? It wasn't like the most realistic, but it was certainly more realistic than the freaking nonsense Too Fast, Too Furious, and everything after that. The first one's director actually had somebody that went and got involved with that culture and understood it. After that, they just went for action, you know. All right, chat, here we go. Citigroup about to release their earnings. They're scheduled for, or no, actually, they're scheduled for 8 a.m. I used to love the Karate Kid movies, too. I used to love karate as a kid. It's not a surprise that I now do jujitsu and stuff like that, because when I was a kid, this was before the internet, so I used to have karate books. Like, just like the guy in Karate Kid had karate books he was looking at, I used to go to the library and rent and like, check out karate books, you know? You know, a lot of young people don't understand this, but in the early 90s, and really the 80s, it was probably the 80s more. In the late 80s, early 90s, you had like a martial arts boom where karate was freaking huge, right? Everybody, the ninjas, everybody wanted to be a ninja. Everybody wanted to do karate, and they were practicing and all this stuff. As a jiu-jitsu guy now, I'd choke all of them out in about 30 seconds. But, you know, back in the late 80s, early 90s, karate was like big. All right, guys, but Citigroup coming out now. All right, State Street did drop their numbers. They beat EPS. Actually, their adjusted EPS was higher than expected. That's different than what I originally saw. They beat revenue as well. Yeah. Yeah. Freaking Chuck Norris, man. 90s was the best time to be a teenager. I wasn't a teenager in the 90s. I'm not that old. But I was a kid in the 90s. Wu-Tang? Yeah, dude. Wu-Tang. We used to listen to Wu-Tang. I like Tupac, personally. Like, Tupac's my favorite old rapper. I like Wu-Tang, though. Wu-Tang's just got so many good songs, you know. All right, chat, here we go. Citigroup. You should see some volatility from Citigroup when it comes out. So here's Citigroup on the right side. Again, Jpmorgan released earnings, and they bounced back a little bit. They're back up to 190s. Wells Fargo is out there slightly green from their earnings report here as well, but Citigroup drops at 8. We also have Progressive dropping at 8 as well. Cobra Kai, yeah, but we got into Cobra Kai recently. My family did. My whole family watches it. John is 19. I wish I was 19, bro. Actually, I don't. Listen, I got a family and kids. I wouldn't want to go back, you know. Tesla to the moon. All right, guys, here we go. Again, watch Citigroup on the right. Citigroup on the right side. We also have Progressive here. The Progressive chart is PGR. So we'll put that chart up as well. There's Wells Fargo on the left. PGR at 203s. Apple is up there too. Apple rebounding here. Here's the SPY in the middle. All right, guys, here we go. Waiting for Citigroup. All right, so again, watch Citigroup at 60.36 right now. Sorry, I'm kind of yelling. I'm not yelling at a customer service rep. I'm frustrated because they're asking me my state, the city of birth, and I'm telling them my city of birth, and they're like, "That's wrong." I'm like, "What?" Like, I'm from Baton Rouge, Louisiana, bro. Come on now. All right, Citigroup, we're waiting for it here. All right, here, we're waiting for Citigroup. Citigroup up a little bit to 60.6. Hasn't really reacted yet. Yeah, if I'm typing words that I know, I can type very quickly. That's why these dumb typing tests. It's like, hey, let's make it easy. Chocolate, dinosaur, chocolate. You know, anti-disestablishmentarianism. You know what I mean? Like, man. All right, Citigroup, 158 EPS versus 123 expected. Revenue of 21.1 billion, 21.1 billion versus 20.4 billion expected. Citigroup better than expected EPS and revenue. Yeah, but I never gave them my birthplace is the frustrating thing. Like, I never gave them, and this is like a poker site, like, I never gave them my birthplace, right? So for them to say, hey, it's wrong, you know, I'm just kind of like, all right, like, whatever, dude. Again, Citigroup up to 61.40s here. PGR up to 206. Let's see if Progressive is out with theirs yet. I don't think they're out. But, again, Citigroup better than expected. PGR still waiting on their numbers, but they're scheduled to come out now, too. Tommy Tank. Honestly, the LSU Tigers baseball team is not looking great this year. Just like the Astros are looking rough. Again, the Tigers lost all their good players after the draft, but still. Look at Citigroup, Rip. Citigroup at 61.30s here, Chad. 61.30s. I just got in. What time does the bank earnings drop? They dropped about 2 minutes ago, brother. 2 minutes ago. We're also going to throw this in sub-only mode. If you have not already, hit that subscribe button. Hit the notification bell. We appreciate the love and support. Thank you so much. Citigroup is spiking up to 62s right now, Chad. 62s here. And the nice part is that we can day trade futures. And in the futures market, we can day trade short. I'm going to put Citigroup on the top. I'm going to put Progressive on the bottom. Look at Citigroup spike. It's at 62s. And we're going to try to maybe day trade some of this volatility that we're getting from bank earnings. Right, so here's the NASDAQ here. Again, we're going to buy this dip. And again, this is futures, guys. So I'm day trading on a... Look at Citigroup up to 62s. I'm day trading futures. So I'm day trading the NASDAQ 100, basically the QQQ in futures. I can buy market, sell market, very similar to day trading stocks. There's just no PDT restriction. So I can get in, get out. No PDT rule in futures. The patterns are very similar to blue chip stock patterns. And day trading blue chip stocks, there's just no PDT in futures. And I can essentially day trade the Q without restriction, with no PDT rule. You know, again, Apex is one of the most legit funded programs in the world. They've paid out over 100 million. We're going to go ahead and cover this. So again, you can kind of see I'm day trading this breakout that I'm getting from Citigroup. We just made a quick 20 or 30 bucks from this. We'll go ahead and get out there. And again, in futures, I could day trade short, buy market, sell market, very similar to day trading stocks. There's just no PDT rule. Again, I'm using a platform called Apex. They are a sponsor of mine. I'm biased because they pay me money. You know, I'm biased because they pay me money. Remember, I'm terrible, have no idea what I'm talking about, might be wildly wrong about anything and everything I say. Understand rule CFTC 4.41, hypothetical simulated performance results have certain limitations and all that good stuff. But again, I'm trading on a platform, a sponsor of mine called Apex. They're funded me with $50,000 in a funded account. You know, what I had to do to earn this 50K funded account was they gave me a demo and they tested my skill. And if I could pass the test, basically I had to make 3K in profit without losing 2,500, a reasonable ratio, 3 to 2.5 ratio, very reasonable ratio. I passed the test, they funded me 50K, and now I have a 90% split. So in this account, I keep 90% of my profit as long as I can follow rules. And again, it's the best of both worlds. It's cheap. If you lose, it's not the end of the world. The base one is 25K. If you lose this, you're out 30, 35 bucks. This one's like 35 bucks, right, for the 50K one. And so if I lose, I'm only out 50K, or I'm only out 35 bucks. It's not the end of the world, right? And when you consider most day traders lose, most people that try to day trade lose, most people lose their first few accounts in day trading. This severely limits your risk, right? Instead of risking thousands of dollars like most new day traders have to do, instead you're risking 30, 35 bucks if you want the 50K one. And but if you're good enough to pass it, you're still keeping 90% split. You're still keeping most of your profit as long as you can follow their rules. And it's just a great way to limit that risk. Learn how to trade under pressure. If you lose, it's not the end of the world. But if you pass it, again, you get 50K in funding with a 90% split. You can potentially make thousands of dollars doing it. But again, I think most day traders lose. And so I think most day traders will lose here as well, just because most day traders lose. It doesn't matter where they go. But it's a lot cheaper to lose here. And again, that's one of the reasons they're one of my sponsors. They're one of the most legit in the world. They've paid out over 100 mil. So again, if you want to check them out, you can use my promo code BT, Beginner Trading BT. Hit the link, check it out. There's the link right there. Appreciate it. Again, Citigroup popping up a little bit. We do have a double top here on the NASDAQ though, chat. So we do have a double top here on the NASDAQ. And again, we do have Citigroup rip it up. It's at $62 a share, almost 62 bucks. Yeah, I remember those. The MR2s, those are fun. They're too small, but they're fun. I like, they're fun. Yeah, so Apex paid out 25 million last month alone. I just started using them, Nick, over the last month. You know what I mean? So I've only been growing my account over the last month, but I'm nicely green in this account, to be honest. I'm really nicely green in this account. And so, yeah. Like, we're really nicely green. We're just kind of slow and steady, trying to grind it up nicely. And let me make sure I'm on the right account. Yeah, okay, good. We're on the right account. But yeah, I only recently started trading on them this month. But again, I'm up a lot in this account already, so I'm pushing towards a payout. But yeah, nice, Matt. Yeah, I think you have to have reasonable expectations for it. I think a lot of people try to get funded, lose, and then blame the platform, when really I think you got to look at it objectively and think about how much you would have lost if you put the money up yourself, which is probably way more. You know, I'm not sure how much it took, Matt. I have to go back and tell you. I definitely lost a few before I got funded. All right, guys, so we do have Citigroup pulling back. I'm going to buy this dip with 2 contracts of micros and futures. I'm just seeing if Citigroup can bounce at the VWAP. If it does, great. If not, I'll cut it and get out, and that's all good. We do have a double top here, so I don't really want to hold this too long if it doesn't work. Yeah, I'm gonna have to cut that. So we just lost maybe 20 bucks there. Big pullback in markets, double top here, so we're gonna have to wait. We can look at a SPY. I'm still waiting for progressive numbers to come out. It is a Friday, chat, so y'all be careful. Progressive numbers are set to drop, but they're just not out yet. They were scheduled to drop at 8 a.m., but they're just not out yet, so we gotta wait for progressive to drop numbers. All right, so again, we're pulling back flat. I'm going to wait for markets to move a little bit. We still are waiting for PGR, which is late on their earnings. Jpmorgan did dump down. So Jpmorgan CFO, so this isn't Diamond, this is somebody else, says forecasting meaningfully harder than any other time, and it's a nice quarter on IB, but remains cautious on future activity, some regulatory headwinds and M&A. So... Rosie is such a baby, bro. Like, dude, Rosie, we baby Rosie so much. We never, ever hit her, do anything like that. Like, whenever she has, like, we condition her through, you know, if she acts up, she's got to get in her crate, right? Which she doesn't want to do. She wants to stay out and be with us. But when she gets stubborn about something, when she's like, no, I'm not going to do it, right? And we have to kind of grab her collar and pull her over. She lays on the ground and just whines. And she just cries and cries and cries, you know, and she acts like we're just like hurting her, but we're not. Like, we don't spank her, we don't like anything. She's so dramatic, man, you know. She's so vocal too. She's like, oh, you know, and she cries and whines, man. Bruce doesn't care. I could literally pull like, you know, Bruce is just a tank, but Rosie is dainty, for lack of a better word, you know, and a little dramatic. But she's sweet. I love Rosie a little bit more than Bruce, just because Rosie's a cool dog. Do you predict mostly 1 minute charts? I also do the 5-minute chart as well. It just depends on what's going on and how broad the market is, how much cushion I have on the day. There's a lot of, you know, stuff that I look at there. So. Yeah. Rosie's a good dog. We baby Rosie so much though. She's a great dog. But again, I think that's babying a dog this much, the consequences, they get really moody and entitled, you know. OpenAI just fired 2 AI researchers over leaking info. Let me know if y'all see progressive numbers coming out. Citigroup's still trying to hold here. We might try to buy a little dip again here too. We'll take 2 contracts, maybe scale in, take a larger risk. I'll probably take up to 3 contracts here. There we go. A little bit of lag this morning, I think, here, though. I'm watching Citigroup. I want to see if Citigroup holds. There we go. That's nice. All right, we took half off. Get a little bit of lag here, too. Took a little bit more off there. That's nice. We're going to let the rest ride. We'll hold the rest flat. Basically flat on the last couple trades. I want to see if Citigroup holds this support level. And again, we're on Apex's funded account program right now. We'll probably hold the rest break even, so if this can't hold, we'll cut it. I'm not going to lose from this trade, so we're going to get out break even there. Somebody says, IQ test, what could realistically kill Bitcoin? I want to hear what you think. Bank competition. Regulation. Too much regulation. Banning it altogether. That's about it. You know, everything else, it'll be around. What do you guys think? Crypto is a threat to banks. Sure. Banks certainly see crypto as a threat. If you don't think they do. It's one of the funniest things I see here, right? Like one of the funniest like nuances I see is that, like you get people arguing big bank for arguing for big banks. Like people are so led in wrong ways, right? People get so, I'm not going to say manipulated. I'm not going to say they're gullible, but people get pushed in different ways and they don't even realize that their talking points, their arguments are pushing for big banks or the elite, right? Like, okay, oil companies, some of the biggest, most elite companies in the world, right? Yet you got a lot, when EV comes out, you got a lot of people arguing for big oil companies, right? Like, why do you think there's so much anti-EV news? Because big oil understands that EV is a huge risk to its business, right? If you're big oil, what's the biggest risk right now? Alternate forms of energy are the biggest risk to you if you're big oil, right? And so what are you going to do? You're going to put out a bunch of, for lack of a better word, propaganda saying, hey, look how bad EV is. You should hate EV. You should hate EV. And again, some people are just going to kind of oblivious to the fact that big oil's behind this push, just jump on the same arguments, you know, jump on the same arguments. You know, the ironic part is they're acting like big oil is the little guy, right? That's the craziest thing. They're acting like big oil is just the little guy and EV's picking on it. Really, it's the opposite. And again, I like internal combustion motors. I'm a big car guy. I like cars, but I think it's funny when you look at it that way. Same thing with regards to banks, right? Banks absolutely understand that crypto is a threat to them. You know, crypto is a DeFi version of banks. That's what it is to a certain extent, at least with like smart contracts and stuff like that. But Bitcoin is like an alternate form. It keeps up with inflation. You don't need a low yielding savings account if you invest in Bitcoin, at least if you have invested in Bitcoin. I'm not telling you to buy anything. Yet again, instead of people recognizing that Bitcoin is a threat to the big banks, instead people argue big banks, and banks run the world, man. Big banks run the world. And so it's one of the reasons you get a lot of people arguing against crypto, right? Because again, big banks put out those talking points. They say, look how bad crypto is. You should hate it. Really, it's a threat to the big banks, and they recognize it and understand it. But it's interesting. And again, I'm not saying it's purely this, right? Like, it's certainly more nuanced than what I'm saying here. But it's interesting how many people are arguing for, like, big business and big banks, you know? It's interesting. It really is. You can't kill Bitcoin, it's too late. World could ban Bitcoin, but it won't kill it. Well, it depends on what you define as kill, I guess. Security breaches? I don't know. I think blockchain technology in general is pretty secure. Now, people are always going to be phished for their passwords and stuff like that, but that's inevitable. It doesn't matter where you go. That's not a risk to it at all, in my opinion. Yeah, put your money in the bank and secure that 0.01%, guys. Yeah, right? Because crypto sucks, bruh. You know? Yeah, it's interesting. Again, it's interesting. People keep saying quantum computers will mess up Bitcoin, but they also forget that quantums will also be used to support it. 100%, right? Like it's good and bad for it, yeah, without question. Like there's certainly risks, But again, there's certainly going to be better software security and everything like that that accompanies quantum computing for sure. All right, chat. So again, we're still waiting for Progressive. Jpmorgan now falling back down. Did PGR ever come out with its earnings? Yeah, so Progressive did drop. It's at 210s right now. Let's see what it showed up as. So Progressive. All right, so we do have the Jpmorgan earnings call that's out. We're going to give you the cliff notes of this. All right, so again, Jpmorgan earnings call. Let me see what Progressive showed. At least I'm assuming, yeah. So Progressive showed 152 EPS, 893.6 million rev, or net income. We also have Jpmorgan speaking right now. So like the guy speaking. So let's see what he says here. So Jpmorgan says says if loss of control of its Russian entity were to occur, then Citi would recognize a loss of 0.6 billion on intercompany liabilities owned by its entity. Jpmorgan CEO Diamond says it is quite clear the American economy is strong in the earnings call. Again, like if you want to go back and like again, people fall for different things. Diamond came out the other day and said, "Oh no, inflation is the worst it could ever be. We're at risk right now," or whatever. Not the worst it could ever be, but he said that we were in all this trouble, and now he's saying the economy is strong. It doesn't necessarily conflict with what he said before, because inflation risks are there in a thriving economy, but still, now he's saying it's quite clear the American economy is strong. Credit card charge-offs are normalizing. There are some cracks in subprime auto earnings in the earnings call. So we'll put some of this news out here. Anytime I use Bitcoin, it's a headache. I mean, where are you using it? You know, Bitcoin's not meant to be an actual currency. That comes from people that don't understand it. Not necessarily what I mean by that is it's not meant to mirror the US dollar. It's just not ever supposed to be that. Like, Bitcoin's supposed to be an investment. And if you treat it like it's the US dollar, you're using it wrong. That would be like going up to the store and trying to pay for your Walmart groceries in actual gold. You know, it's not the same thing. You know, and if you think it is, again, research a little bit more. All right, NASDAQ is down some here. Part of me wants to buy this dip, but I guess we'll start with one contract here. When war starts, let's see you all holding that Bitcoin. Yeah, but you could use that argument for every major investment. You know what I mean? Like, you could use that argument for everything. I could use that argument for anything and everything. You know, Pokemon cards. I could use that argument for cars. I could use that argument for investing in anything. Government bonds, right? If the government fails, like, the bonds are worthless. But again, it's not a... We can't look at the worst thing that could ever happen and then use that as an argument against something. I mean, we can. I don't know how valid it is. You know, I hear this argument all the time about not buying bonds, right? Like, I know people that are literally sitting on hundreds of thousands of dollars in pure cash, right? And they're not moving it. They're just sitting on it, losing money to inflation. And I ask them, I say, hey, are you going to spend that money in the next 5 to 10 years? They're like, no, we're just going to sit on it. Why don't you buy bonds then? Like, buy government bonds. With 100K right now, you're going to make thousands of dollars a year if you buy Treasury bonds. You know, you buy, again, you're going to make about $4.4 thousand a year from 100K. You know, 4.4K a year, you're going to make over 40 grand over a 10-year period in a 10-year Treasury bond right now. And again, the argument I always hear against it by the same people is like, well, what if the government fails? Like, bro, if the government fails, you got a lot bigger problems than your freaking Treasury bonds, dude. You know, your dollars aren't going to be worth anything anyway in that situation, you know. And so you know, if you're going to invest it, because again, your cash ain't going to be worth much in those situations anyway. The only thing that's going to be worth anything in those situations is like food, you know, gas maybe, you know what I mean? 100K is 1K a month. Yeah, that's it's less than that actually. It's about $400. It's like 3 something a month, I think. So you got 100K. You buy Treasury bills that give you about 4.5%. We'll call it 4.4% because I think it's like 4.3 right now. But you buy, they're gonna pay you about $4,300 a year, give or take, right? Divided by 12, you're gonna make about $360 a month, give or take, right? If you buy 100K, it's not gonna be $1,000 a month. I wish it was. All right, so we are in this. We're gonna buy a little bit more here since we're already green. Right, that's what I'm saying, Jay. Like, using the government fail argument is just not a real argument. Again, you got a lot bigger problems than Treasury bonds and investments in that situation. So again, I guess the overarching point I'm making is that if you sit on big cash long term, you're losing money to inflation. You might as well let it work a little bit for you. Treasury bonds are guaranteed returns, right? So you are guaranteed 4.4 to 4.3%, whatever it is right now. 10-year pace currently. Am I getting the symbol wrong? What's the 10-year bond symbol? What's the 10-year bond symbol? Am I wrong here? I thought it was TNX. Yeah, K. I don't... Yeah, I don't know where you're getting your math skills from, K. Fry, but you are very... very wrong. I think you're referencing like a really gambly all right, we're gonna go ahead and take half off here, like a really gambly. All right, we're gonna take another half off there too, as well. I think you're referencing like a really gambly. TNX is down. Okay, gotcha. Yeah, I don't know what's going on with TNX. It's weird right now. But I think you're referencing like a really gambly yield, like from some weird symbol. Nothing is going to pay you without risks. How much did you say? 8 to 13% yearly. Nothing's going to pay you that without massive risks, right? Without it being a wildly depreciating symbol. So you might, some might claim to pay you that, but they're probably dropping huge percentages every year as well, right? So again, we're talking about 10-year Treasury bills, not whatever you just mentioned. Yeah, again, the Dunning-Kruger effect, man. Yeah, we're talking 10-year Treasury bills that pay right now they're paying 4.3, 4.4% right now. Whatever you're arguing, K, it's just again Dunning-Kruger effect, bro. Sorry, but that's what this is. It's the Dunning-Kruger effect. It's the people that know the least typically think they know the most and are the biggest, most loudest arguments. It's all love. You're wildly wrong because we're referencing 10-year Treasury bills, but cheers to you today. Because we're not talking about your ticker, K. We're talking about 10-year Treasury bills right now, man. We're talking about TNX 10-year Treasury bills yielding about 4.37% currently. That's what we're talking about. We're not talking about whatever symbol you're throwing out there. We're talking about 10-year Treasury bills. You're talking about some Jpmorgan Trust Equity Premium Income ETF, which has nothing to do with what we're talking about, And so, hey, it's all good, but yeah, the top hedge funds in New York don't get you 10% yearly. Again, Dunning-Kruger effect is very strong in trading, very strong. If you don't know what the Dunning-Kruger effect is, it's people that know the least. Typically, the people that are experienced generally can admit how little they know, right? People who know the least typically are new, and so they don't really understand the broad impacts of things, and so they argue like they do, and it's all good. All right, guys, Q is still sitting here. Apple tried to hold. NVIDIA was over 900. We're at 903.16. Right at the volume weighted average price for NVIDIA. This is going to be a big influence over stuff too. Yeah, but I mean, again, K-Fry, the fact that you're arguing here shows that you don't understand what we're talking about. Okay, so when I say, hey, 10-year Treasury yields will pay you 4.3, 4.4%, I'm not talking about whatever super risky high-income yield ETF is paying you. I'm not talking about that at all. You know, so you coming out here in the chat saying, you're wrong, when really you don't even seem to recognize what we're talking about. Again, it's all love. Research what a treasury bill is or a treasury bond is. You know, you'll understand what I'm saying. None of the other things are safe that you're arguing. Those high income yields, most of the time what happens is that they're dipping down. It's important. It's a good lesson for everybody at home. You might find if it's too good to be true, it usually is. You know, especially with these high income yielding ETFs that supposedly pay out, you know, crazy big percentages. They're certainly not risk-free like treasury bonds are, you know. Well, you were definitely telling me we were wrong, Kay, but it's all good, you know. Cheers to you. Yeah, we'll see if we get a double top. We had the double top here on the NASDAQ. Yeah, it's all good. We'll move on. What's the symbol for the NASDAQ? NQ. It depends on which one. Are you using Quant Tower or something? D. It's usually NQ. Right now, the current rollover symbol is NQM4 is the regular NASDAQ. The micro NASDAQ, which is what you see me on here, is MNQM4. So. Bank earnings are already out. Citigroup is out there. I'm going to try to put all of them up on one thing so we can cover all of them. But bank earnings are already out. We had Jpmorgan, BLK, Wells Fargo, Citigroup, all out already. So. Here's the latest run. Yeah, we did have import-export prices that just dropped. Again, it's not really a huge release, though. We'll cover it. It came in at 0.4 versus 0.3% for import-export prices. Again, it's not really a huge release. But again, we'll put it up on screen. It's not really going to move the market too much either. So here's the import numbers right there. JEPI is an ETF that owns a basket of lower volatility stocks that pays dividends. The ETF creates more income by selling covered calls. Yeah, but again, there's massive, massive risks to this. Okay, there's massive, massive risks to that. It's certainly not risk-free. Again, what we were talking about here was treasury bonds, which are guaranteed returns by the U.S. government. You got two different sides of investing, right? Guaranteed things in the market like treasury bonds, treasury bills, treasury notes, whatever you want to call them, depending on the maturity date, are guaranteed. They're guaranteed by the U.S. government. So basically, you're loaning the U.S. government money, and the U.S. government's saying, yo, we'll pay you X amount in interest per year. So if I buy a 4.4% treasury bill right now, a 10-year note, if you look at TNX, it's paying about 4.4%. If I buy that right now, if I spend $100,000 on those treasury notes, or treasury bonds, the U.S. government's going to pay me 4.4% in interest. So if I spend $100K, they're going to give me about 4.4K a year for 10 years, every year for 10 years. And then at the end of that 10-year period, at maturity, they're going to give me my 100K back. So essentially, I'm going to make 40-something% over a 10-year period by loaning the U.S. government money. And while that yield is relatively low, it's guaranteed by the U.S. government. If we look at like the S&P 500, just as another example, S&P 500 gives you about 8 to 10% a year on average, right? The S&P 500 will pay out about 8 to 10% a year, or, on average, which means on good years like last year, it's going to pay out much more than that at 24%. On bad years, it's going to be down, of course, but it's not guaranteed. It's certainly higher risk than something that is absolutely guaranteed, like Treasury bonds, right? So Treasury bonds, low yield, but guaranteed. And this is why sometimes there's inverse correlations between the two, is because they're competitive with each other. The more people that are buying Treasury yields, or more people that are buying bonds, the less people that are buying the S&P, and vice versa a lot of the time. And so again, bonds are guaranteed by the U.S. government, Treasury bonds, but they have a much smaller yield than something like the S&P or the NASDAQ, which is not guaranteed, of course, which is certainly more risky, but the yield is much higher. It pays out about 8 to 10% a year. Yeah, higher risk, higher reward, essentially. Again, solid. No offense. I think you got to be a little bit less emotional about it. Solid said, I wouldn't loan this ish. You're disregarding inflation, John, yelling and stuff like that. Again, I think you got to be a little bit less emotional about it and understand that Treasury bonds are hedging for inflation. Like, yes, inflation is real, right? But that's why you invest in Treasury bonds. That's why you don't sit on cash. That's the argument against sitting on cash, and that's the argument for Treasury bonds, is because, again, if you do not invest your money, if you do not hedge against inflation, you will lose it. If you sit on cash long term, you're going to lose so much more money than you ever would investing in Treasury bonds, or probably investing in the S&P 500. You can hedge against inflation in a lot of different ways. We say this at least once a day. Usually I'll say it again. You can buy gold, you can buy silver, you can buy the NASDAQ, you can buy the S&P, you can buy Apple, Amazon, you can buy real estate, you can invest in Treasury bonds. All of these things to a certain extent will help keep up with inflation, and if you sit on cash long term, you are going to lose it. Solid. I'm not emotional. I have no emotion in this ish. Exclamation point, exclamation point. I'm not mad. Exclamation point. What movie is that from? Where he's like, I'm not mad, and he's angry. Yeah. I'll take investment advice from a YouTube chat. Top 3 worst investors in the world right now. Keep like 10% cash. Yeah, it depends. All right, so market's flushing down a little bit. Banks bounced back. We did have a rebound from PPI yesterday. Again, CPI dumped the market down. Inflation was a little bit worse than expected on Wednesday. PPI showed up yesterday, lower than expected, better than expected. The market rebounded almost right back up. We're kind of neutral over the last 5 days, though, chat. So we went up a lot yesterday, but the day before that, we went down a lot. And so now we're somewhere in the middle. I am not in Louisiana right now, Chris. I am from Louisiana. I'm in Texas right now. And listen, guys, if you ruin this market, I will burn this office to the ground, and I mean that figuratively, not literally, because you guys are so important to me. I love you guys, but don't cross me. But you're the best. Cheers to you. Coffee tastes good. All right. Yeah, I mean, it's all good, solid. Like I said, I think it's a little, I think the irony is really funny because you know, and again, it might just be the way you're typing. It's like if you use 5 exclamation points to say something and everything you say uses multiple exclamation points, it might seem like you're excited or upset or emotional. And again, maybe it's just the way you're typing. It's all good, bro. It's all good. You know, I appreciate you contributing to my chat, brother. It's all good, man. Crypto turning red. Is it really? Again, the whole market's kind of turning red. NASDAQ dumping down to these lows. So we have this low from earlier on the day. We'll see if that level supports. NVIDIA breaking down to $900 a share. I might buy this dip. I think NVIDIA might bounce at 900. So we're going to take 2 contracts here. NVIDIA's pulling back to 900. Movie Kids is a super messed up movie, in all honesty. It's not a good movie. It's a sad movie. All right, we're going to add to this position a little bit, take 3, 4 contracts here. See if we get a bounce at this level. Again, I'm seeing if NVIDIA holds. We built up a little cushion on the day, so we can try to play with it now and see if we get a bounce. Flat on the trade currently. We're in 4 contracts. Flat. There we go. Looks like it wants to move up, but it's trying too hard to hold and not really holding. Yeah, that's a big fall. We got to cut it. So we just cracked lows. I wanted to see if NVIDIA would bounce at 900, but it didn't. Luckily, we're kind of flat on the day now. Yeah, YouTube's interesting. Again, it's an interesting look at markets and people, you know. I'm going to jump right back in this, I think. Again, it's a little risky of a bet. I just want to see if NVIDIA holds at this level here, you know. Maybe I'm getting a little stubborn with it. There we go. Took half of that back. We'll have we have 2 contracts left. We'll try to be a little bit looser with this. Again, NVIDIA did bounce at 900, so we got it. We got what we wanted there. We'll take 3 contracts, add a little bit more. It's a little bit risky catching a fallen knife like this, but all right, we took another piece off, locking it in. Try to be a little flat on the rest, maybe not risk too much. The problem with this type of trade is that if we do break down, we can break down really, really fast, right? So even if we try to use a 1-to-1 ratio, it might not work just because of how fast we could potentially break down. So like, see how quickly it's moving. All right, so a big flush down. Look at this. So again, I'm glad we got out. We got out and saved ourselves the pain of this. Look at this dump. WTF, earnings were good and stocks are down. Yeah, I mean, again, you get this all the time, right? Like, you hear people say this all the time. And again, I'm going to tell you the same thing I always tell people. If it was that easy to make money, we'd all be rich. Okay? If it was easy, listen, think about how easy it would be if it was this binary, right? Imagine how easy it would be. All you have to do is sit around waiting for banks to release good earnings, good EPS and revenue, and then just click buy. We'd all be rich. Everybody would just sit around, wait for earnings to drop, click buy if it's good, click sell if it's bad, and ride off into the sunset wealthy. I wish it was that easy. I really do wish the markets were that easy. The problem is that that's simply too easy. Everybody would be rich. There's a lot more nuance behind it. It's not as simple as good earnings equals good reactions and bad earnings equal bad reactions. Again, if it was, again, think about it. Everybody would be rich. We just sit around, you know, taking the appropriate trades based off of what the earnings were, and that's it. The reason it doesn't work is because people are buying up the potential earnings reactions way back here, you know, in the last couple weeks, months. People are front loading, baking into these moves. And so when the moves actually happen, sometimes they take buys, sometimes they sell based off it. There's just a lot of, again, there's a lot of nuance behind it. It's just simply not as easy as, hey, good earnings, good revenue, up. Like stock goes up, bad earnings, bad revenue, stock goes down. I cover a lot of earnings calls. We cover every major earnings report here. Unfortunately, it's not like that at all. If anything, sometimes it's actually the opposite, where we get opposite moves. We get conflicting moves based off of what the earnings were because, again, everybody's already baked into it by that point in time. And so it's just really complex, I guess, is the easiest way to put it. Hey, what's up, Connor? Yeah, it's not supposed to be this easy. It's not supposed to be this easy. Hey, have a good day, brother. We got almost 1,000 people here today, man. Pretty good turnout for bank earnings, in all honesty. I appreciate you guys joining me and watching my stream. You know, we appreciate the love. Options or gambling at the casino? What has better odds? Well, that's very vague. I mean, it could be anything. Chat, like, it depends on what you play. Blob. It depends on what you play. You know, if you play slot machines, I would argue options is probably better, but it depends on the options contract. If you're playing blackjack, it depends on how good you are, what you're doing, if you're counting cards or not. It depends on what options contract. If you're playing poker, I love poker. I would give poker better odds. But again, it depends on the player, depends on who you're playing, depends on the options contracts. So it's not an easy answer. It's much more loaded than that. Like, there's a lot of outcomes. There's a lot of details that you need to provide in order to really give you a realistic answer behind that. Slot machines are, I guess I'll go ahead and say, I was going to say slot machines are for dumb people. Okay. I'm going to retract that statement because I think some people have money to blow and they're just kind of horsing around, right? The problem with slot machines is that you are programmed to lose money. You're just programmed to lose money. That's all they're doing is programming you to lose money. And they're trapping you into it by giving you a bunch of flashy lights on screen. You know, a bunch of flashy lights, overstimulating things like, ooh, look at all these fancy flashy lights. Please give us another $5, right? And they're just kind of slowly milking money from people. Worst odds in the casino. Genuinely the worst odds. With some outliers. Like if you walk around and find loaded machines, sure. But like, outside of that, worst odds in the casino. The only people that really get addicted to losing money are, you know, again, if you have a bunch of money and you just don't have much to do and you like doing it, fine. I'm not judging you. But worst odds in the casino. As a poker player, I despise slot machines, you know. It's a dopamine machine, yeah. Hey man, first day here watching your stream as a beginner. I love your stream. Since I joined, I learned a lot of things from you. Hey, thank you, Stop. I appreciate the support. If you're new to poker, you'll probably win. Not necessarily. Is our friend that said having 2,500 viewers is a joke with us today? No, he got banned. He had to be trolling, though. Like again, if I was in front of 2,500 actual people, I would poop my pants, bro. I would never be able to, like, I would be so nervous speaking in, we have almost 1,000 people here. If I was in front of 1,000 actual people, like, y'all don't exist to me. Y'all are just a number on my screen right now. You know, if I was in front of 900 real people, I would freak out. Like, freak out. You know, I'm not really extroverted like that. It might seem like I am, and I kind of am, but I'm somewhere in the middle of an introvert and extrovert. I like being introverted. I'm a homebody. I like staying at home and watching movies and hanging out. But I can be outgoing if I want to, but I don't really like doing it. And so I'm probably more introverted in nature. But I guess the point is, like, 900 views. Yeah, he was just trying to insult. He was mad. Typically, misery loves company. And so if you're struggling in life, you might want to drag other people down. And that's kind of a normal thing. You know, they might justify it in other ways, saying, "Oh, I'm just joking, ha ha ha." You know, hey baby, how you doing? All right, sorry, my wife is here. We are a number. Bro, y'all don't exist. Y'all are online friends, okay? Y'all would never tell my secrets to anybody, right? Yeah. It's surprising. I have gotten stalkers from this. Like, I have gotten legit stalkers. Like, actual stalkers. I gave one dude my phone number one time, bro. Bro, I couldn't take a nap without getting like 40 calls. Just obsessed. Weird. Again, people have to understand how that comes off. Like, that comes across as like, if I don't know you like that and you're calling me 5-10 times a day, I'm gonna feel uneasy from that and distance myself from you. You know, people are weird, dude. All right, guys. Yeah, we got about 40 minutes until the opening bell. We got about 900 people here live. We appreciate the love. I appreciate, again, I remember when I started this channel, I was super pumped to get like 100 viewers, right? Like 100 viewers. People don't understand. If you can get 200 to 300 viewers regularly, you can make 50K a year on YouTube, you know? A lot of people don't understand that. And so, you know, criticizing me because I have 2,000 something viewers is silly. And really, our CPI stream, again, what he was saying was that, because I told people before CPI dropped, I said, hey, we'll have thousands of people here. We'll probably have 3,000 to 4,000 people here for CPI, right? And so he was saying, aha, you only had 2,500, when really that was really wrong. Like, I think his internet couldn't keep up with how many people we had. But realistically, if you look at these numbers here, chat, we had 5,100 people watching that stream. You know, 5,100 people. So here's CPI stream. Like, look. Like, we had 5,100 people here watching that stream. So, and then even Fed Minutes Report, we had like thousands and thousands. And so if I was in front of 5,000 actual people, I would freak out. I'd never be able to say anything. So. Yeah, I'll learn not to give out that number quick. No. You know, I was just mocking him, right? Who? I'm your biggest fan. This is Stan. Please don't. Yeah. I'm more than just a number, John. I know, man. PGR earnings. Yeah, we did look at Progressive. Progressive originally spiked up. Here's PGR. It's at 209s, 210s right now. Again, banks are neutral. I would say Jpmorgan's down. Wells Fargo flat. Progressive up at 208s. BLK, which I know is not a bank, but it's a fund, but still, it's up a little bit. It had better than expected results here as well. Yeah, you can still use Apex. You can only day trade though, Drew. So I mean, you can use Apex, but you can't hold anything overnight. And again, if you want to check out Apex, they are a sponsor of mine. If you want to day trade like I'm day trading here, again, you can see it's very similar to day trading stocks. There's just no PDT rule in futures, and I'm day trading the QQQ price action in the Nasdaq versus like Apple. But patterns are very similar. If you look at NVDA and you look at the Q, it looks very similar, like big red action consolidation, big red action consolidation. So I can day trade this left side in futures, no PDT rule. Apex tests you, they give you a demo, they test your skill. If you could pass the test on a demo, they fund you in a regular account. And they pay out millions. They paid out over 25 million last month to their traders. They've paid out over $100 million. They're one of the most legit funded programs in the world. And the best part is like learning how to day trade with them, in my opinion, is better than putting up thousands and risking thousands yourself. Most day traders lose. If you put up thousands, you're probably going to lose thousands in the beginning. Limit your risk. The base one here, if you lose it, you're out 30, 35 bucks. But if you pass it, you get 25K in funding, 90% split. Again, great way to hedge against the risk of learning how to day trade. And if you're a good day trader and you just don't have that much money, it's a good way to get started for less, right? But remember, they are a sponsor. I'm biased. They pay me money, so of course I'm biased in their favor because of that. But if you do want to check them out, promo code BT, beginner trading BT, get you the max discount at all times. If you ever want the max discount on Apex, BT will get you the max discount. People are way too sensitive on the internet. I'm definitely top 3 most sensitive people in the world right now. Every time I see a sunset, I cry. I cry. I'm just like, man, look at that sunset. And I was thinking about dyeing my head dyeing my head red. A lot of y'all don't understand that reference, the joke I just made. If you do, you're cool, though. If y'all think I really cry at sunsets, I do. NVIDIA breaking down here. Down to 898.50s. So NVIDIA break it down. You can see the NASDAQ following it. And again, this is how you get exposure to day trading stocks and futures. Because look at NVIDIA. Look at the NASDAQ. They mirror each other here. You're in tune with the world. Definitely top 3 most in tune traders. What did you do for the eclipse? I went to Sam's Club, which is probably the best place to be if the world ends. We wanted to see the eclipse, but it was really cloudy and rainy. It just got really, really dark. And then that's basically all that happened, Yeah, that was the reference pawn. The reference was from Bedazzled, the movie, where he wishes to be the most sensitive man in the world. But the problem is, they overdo it to where every time he sees a sunset, he starts crying. And the girl eventually gets kind of turned off by it and was like, all right, bro. He can't hang out without crying, I'm not a big crier in nature anyway, I'm not top 3 most criers ever in the world. Realistically, I probably cry I probably cry once or twice a year, maybe, max, I would say. Carol's probably seen me cry 5 times. So maybe averaging a little bit less than a year, I guess. How much do you cry, chat? Don't lie about it. Here's NVIDIA, 897s. This market makes me want to cry, Saving Private Ryan. Saving Private Ryan. The dog movies get me. My dog Skip, I'm not a big movie crier, though. Top 3 crazy criers in the world. Top 5 scared of planes people in the world. That might be true. Oh, if you take everything I say literally, you're gonna have problems. I'm highly sarcastic here, of course. Most of the time I'm trolling you, with exceptions. Regarding to your bonds debate, it's safer to sit cash on a safe bank that pays you a yield similar to long-term bonds. Right, like a CD or something like that. And if you're sitting under 250K, you're protected. No, I feel you. That's probably true, Red Green. Because if you need access to your money, you can get it, right? So putting your money in a CD is probably the least risky of all of them. Because, again, you can find banks that will give you similar yields to bonds. But if you want to withdraw the money, you can, right? You're gonna lose out on your yield, but like you can still withdraw the money if it's absolutely essential that you get it. So you're probably right, Green. I agree. I think CDs and stuff like that, which if you don't know what a CD is, it's a certified deposit. You're not gonna find them on all your banks, but you can kind of research what banks offer good yields in CDs and you know, attack those different options. You know, I think that makes a lot of sense too, for sure. But so again, I essentially agree with you. Only betas cry. Nah, everybody cries. I love brownies and ice cream. I'm a crybaby for real, for real. No cap. Go back to my young slang here, like yesterday. Again, my daughter non-ironically uses the word bus. I hate it. Like, this cookie is bus. You know. I tried to tell her again, I'm going to say this again. Young people copied off of our slang. Bus is a shortened, abbreviated form of that's busting out the roof or busting out the ground or whatever you want to say. Just a shortened, abbreviated form of it. Bus it is. That is now, again, even more abbreviated to bus. Cappin', I think Cappin's kind of original for the young generation. Mid is a shortened form of mid-grade, referencing originally not good but not bad cannabis. So that's what mid means. It's a shortened form of mid-grade. Low-key was used and really copied from my generation as well. Maybe generations before me, really. Low key, like, hey, let's keep this low key and do this, right? Let's keep this low key and do that. Now young people use it, but a little bit different context. But again, they're basically copying off of our generation in that way too, in the generations before me. So I guess my point is, young people, y'all are not original. You know, y'all slang is really just copied versions of our slang. That's tight. Oh, bro, that was my generation. That's tight, you know. Use that tight nowadays. Even the ankle, the one that gets me the most is ankle socks. Right? Look at the market still dumping down here, downtrending really since like 8:05 market time. It's now past 9. Nasdaq has fallen heavy over the last 30-45 minutes. So the market's fallen down. Bank earnings not helping the market. Microsoft dumping down a little bit as well. Jpmorgan falling down a little bit today. Also, is it time to buy the dip in Jpmorgan? I don't know. Sus originated from what's the video game Among Us, right? My family used to play Among Us together. It was really fun, actually. If you have a family, all download Among Us to your devices and play together. It's really, really fun. But that's where sus originated from. It was because you had to type really quickly, and so it was suspect, like that's suspect. Because you had to type it quickly, it was shortened to sus. You know, you're welcome. I'm gonna start charging y'all for this knowledge. Yeah, tight was early. Low-key is ours. Define ours. Slick. I still use slick. Like in jiu-jitsu terms, I'll say that was a slick triangle, or that was a slick armbar, or that was a slick guillotine, or that was a slick takedown. You know, so I still use slick. Slick is, you know, pretty immune to trend changes, I think. Thank you for the knowledge, John. Didn't know it came from Among Us. You're welcome. This chat bussin' for real, no cap. On G. Hey. Jinko. Jeez, I used to wear Jinkos, bro. Jinkos. I was a skateboarder back in the day, but I grew up in the 90s. Free Dress Friday. Again, we wore Jinkos. I had some Jinkos with like this big alien on it, you know? Most ridiculous looking freaking jeans ever, man. It's crazy the young people adopted all the cringiest like styles from the 90s, right? Now it's cool again. But people my age are really cringing when they see it. They're like, bro, y'all are copying the worst styles ever. you know, from back in the day. Like super over baggy jeans look ridiculous. Again, Soundhound's still down to 460s. We're watching, and Microsoft down to 424s. Again, we were just kind of sitting tight here, not really doing anything. BLK falling down a little bit, though. Look at Jpmorgan. We got 24 minutes left. 24 minutes left. Again, we had import-export prices and bank earnings today, so not a ton of economic reports, but we still had some stuff to talk about. I use Dude a lot. But although Dude can kind of be like a Louisiana thing as well. Like, people from Louisiana use... like, if I talk to my son, right, I'll be like, hey, bruh, come here. Or I'll be like, hey, dude, come here. Right? That's like kind of a southern thing, almost a Louisiana thing, I would say. Kind of a Louisiana slang saying, where it's different from somebody in, like, California being like, dude. Like, and I use dude a lot, so I'm not judging the people in Cali either. But it's a different context. Again, I really think it's a Louisiana thing. But yeah, so crude. We're watching Jpmorgan. It's down there. We'll see if it can hold over the lows. The lows are right around 187. Exxon gapping up really nice today. We're in Exxon. Crude up really nicely today as well, up to almost 87 in crude futures. Microsoft down to 425s, under 425s. Tesla at 172s. It's still green relative to where it was midday yesterday, though. And NVIDIA is the big one to watch. Watch the $900 level. Here's 900. It's got to be a really big milestone spot for NVIDIA, I think. And I think the whole market kind of watches it. We also have this low here at 895. So we're kind of trading still in the pre-market range. Yeah, I'm not a big babe person. Like, I don't call Carol babe. That's like a younger person thing. Like, hey, babe. You know? Like, I call her baby. Like, hey, baby, come here. You know, but I'm not a big babe user. I'm not judging you if you do. It's all preference. Wicked smart. I don't know. I say dude a lot. I call my son bro, dude. I call my wife bro and dude. You know, it's just slang. Oil breaking highs as well at 87s. Baby doll, nah. I'm not a big pet name person, Flo. You know. Jpmorgan released earnings. They were pretty good earnings, but they dropped a lot. But mostly from Jamie Dimon's sentiment. He was a little bit bearish, I would say. I'm not sure if he's trying to buy more of his own stock or what he's trying to push it down for, but Jpmorgan negatively reacted to that. It's down to 188s now. All right, chat, here we go. 20 minutes. I call Carol by her full name when I'm annoyed. Like, instead of saying, hey baby, come here, hey Carol, come here. You know, it's kind of like when I call my daughter Madison. My daughter always knows I'm upset if I say her full name. Usually we call her Maddie, but if I say Madison, she knows we're upset, you know. It's /CL. It depends on where you're looking at it, K, but it's CL. CL is the future symbol. Again, it depends on where you're trading it, though. Like on TOS, to trade futures, you put a slash in front of it. If it's a dedicated futures broker, you just kind of put a CLM4 or whatever the symbol is. Let me see. See, this is oil right here. I think it's oil. Yeah. So this is crude right now. You can see how much crude's pushing up. Big gains in crude. Probably from. I'm assuming this is probably from overseas conflicts, right? So oil tends to spike. The price of crude tends to spike from overseas conflicts. And I read a lot about overseas conflicts today. And so I'm assuming that's why crude is spiking. But if I'm wrong, chat, correct me. But I'm pretty sure that's probably why it's up. Yeah, I don't think we should cut anytime soon. I think inflation's still sticky. I think PPI was better than expected, but I do think it is way too early to start cutting rates. I think we still have inflation to get under control, like to really get under control, and I think it's too early to start cutting. Yeah, Middle East tensions making oil spike. That's what I figured. How about UFC 300? I'm excited, man. I'm the most excited that I've been in a while for a UFC event. All right, chat. We're still hanging out, waiting for the market to open. Crude spiking up a little bit today after overseas conflict troubles. NVDA bouncing again, under 900 though. So we do have a little bit of a. I don't know if it's a double bottom here, but it's close to one. Jpmorgan kind of doing a very similar thing to NVIDIA, and the Nasdaq, with all that said, has been kind of flushing down some here. Gaethje gonna chop Max down with those leg kicks? Yeah, he might, man. I get excited for every UFC and then fall asleep. That only happens for, like, it depends on, it really depends. Like, usually I can stay up for them. But, like, there's some times where I just get so tired that I do fall asleep for the big ones. But I'm not gonna fall asleep for this one. This one's gonna be fun. Hey, thanks, Lo-Fi. Yeah, y'all check out Lo-Fi Trader's channel. It's Lo-Fi Trader. He's up there in chat somewhere. Check out his channel. You know, go give that man a subscribe. Let me find it. Yeah, here it is. Go subscribe to his channel. There's the link. We'll never get inflation under control while quantitative easing and the money printer still in high gear. Yeah, I mean, solid. Listen, let me teach you a little bit about economics, brother. Right now we are not in the middle of quantitative easing. Quantitative easing is something they do when they're trying to bring interest rates down, right? So if the Federal Reserve wants to bring interest rates down, typically it's because we're at risk for a recession or depression. The first thing they'll usually try is just to cut the federal funds rate, which is bringing short-term interest rates down. Eventually, it'll trickle into long-term rates. But the first thing that they'll try is to bring short-term interest rates down by cutting the federal funds rate. If they're still worried about it, right? If they're still worried about economic risks, like too little spending, unemployment being high, recession, depression risks, then they'll do something called quantitative easing and money printing, right? They're essentially buying up bonds, expanding their balance sheet, and injecting liquidity into markets. And this ultimately will allow banks to lower interest rates to consumers and bring interest rates back down by changing bond prices and liquidity. And so again, that is called quantitative easing. It's something that the Federal Reserve will do, again, if the economy is at risk for a recession, depression, stuff like that. But one of the consequences of the quantitative easing is inflation, right? So again, we did that, like as an example, the Federal Reserve did QE is what it's called. They did that in 2008 from the mortgage disaster, because again, we had that disaster, we lost jobs, the economy was at risk, they brought interest rates down to almost zero. And the logic of it is that when they bring interest rates down, consumers spend more, right? They're paying less in mortgages, they're paying less in auto financing, they have more money to spend, and it stimulates the economy in that way. One of the consequences of QE is inflation, right? So in 2020, we did QE. We cut the federal funds rate, and we did QE, and we brought interest rates down to almost zero. If you look at the graph from it, right, from the government website, here's 2020, okay? Here's 2020. We brought interest rates down to almost zero. And you can see we kept interest rates there for a long time. You know, this is short-term interest rates. Eventually, it trickled into long-term rates as well. It's one of the reasons, like, mortgage brokers thrived in this period because interest rates were so low. They could sell mortgages really easily because everybody wants lending when interest is cheap. The consequence was inflation. Inflation around this time spiked to almost 9%. You know, so almost 9%, really, really bad inflation. And so now what the Fed is doing since 2022 specifically, so you can kind of see 2022 starting here. One of the things the Fed has been doing since then is the opposite of QE. It's actually the opposite of QE is what we're currently in, which is called quantitative tightening. It's not direct QT, so it's not directly selling Treasury bonds and taking liquidity away from the markets like that, or from the economy like that. Instead, it's called passive QT, which is letting their current bond holdings mature and run off their balance sheet and reducing their balance sheet in that regard. Again, this ultimately takes liquidity away, causes interest rates to remain high, right? So again, that's called QT. That's what we're still in right now. Now, if you look at the Fed minutes report yesterday, they were talking about when we were going to start slowing and end QT. But we're still in the midst of QT right now, which is, again, the opposite of QE. It is taking liquidity away from markets and keeping interest rates high. And the reason they do this is to combat inflation, right? Again, first, what you'll see them do is raise the federal funds rate. Which is what you see here. They were raising the federal funds rate. They brought the federal funds rate up, again, trying to discourage spending, keep interest rates high. The consequence of that can be recessions, depressions, stuff like that, because the longer you keep interest rates high, the more businesses struggle because businesses rely on lending, if that makes sense, right? Lately, we've been pausing rates, but again, we're still in QT. We're still in quantitative tightening. We're in a tightening phase still, but the Fed's talking about starting to slow it right now. And so again, if you want to know when interest rates are going to start going down, say you're in mortgages, you're in real estate, you want to know when interest rates are going to drop, listen for the Fed meetings, listen to when the Fed starts announcing that they're going to end QT, they're going to slow and end QT. And that's kind of what they've been talking about lately, but it's going to be either late this year, early next year when they really end QT. And the other question is, when do we pivot to start cutting the federal funds rate and trying to bring interest rates down directly through short-term rates, right? So that is economics in a nutshell with the Federal Reserve and all that stuff. But yeah, so I gave you that understanding because, again, you said we were in the midst of QT or of QE. We're not. We're in a tightening phase right now. So hope all of that makes sense. I think when you start to understand that, economics becomes a little bit easier to grasp and understand. But yeah, right now, again, you hear people say, hey, we're in a recession, we're in a depression, the market is crazy, we're in a recession or depression. We're obviously not. The Fed is in the opposite of that. The Fed's making decisions that show the opposite of that. Again, unemployment's still pretty freaking low. Jobs are strong. Economy's doing okay. I'm not saying everything's sunshine and, fine, but it's certainly not recession, depression territory where we have nobody working, nobody spending, stuff like that, right? So instead, we're at the other end where we have too much spending over the last few years that causes inflation spikes. And again, I think we should wait to cut rates because we need to get inflation under control first. John, is this an Adderall rant? Nah, dude, I don't take, I have ADHD, but I don't take anything for it. I tried taking stuff for it before, but it would just make me not get excited about anything. Like, I would take ADHD medication and I would literally sit there and not do anything. Like, I would sit there and not do anything. It kind of slowed me down almost. Like, I'm actually more hyper from ADHD not medicated than I would be medicated, brother. Could be coffee, but... Yeah. Again, you got a lot of people that say they have ADHD. I don't know, man. I think sometimes they're just kind of excusing a lack of ambition and motivation from it. Like, my son and I truly do have ADHD, and, it's a blessing and a curse, right? Like, if I'm interested in something, I'm hyper-focused on it. But if it's not interesting to me, it's very, very, very difficult to get me to concentrate on it. My son's worse. You learn to deal with it as you get older, but... New sub here. The info you put out helps me navigate the market. Hey, all good. Yeah, because, again, I say this at least once a day. Like, I teach people about the Federal Reserve decisions, like rate hikes, rate cuts, QE, QT. I teach people about these things so that they can understand it, because you get a lot of people that talk about it and either they don't truly understand it or they don't explain it in an understandable way to people, and like why the Fed is doing what it means, like all this different stuff, right? So you get people that explain it that really don't understand it, and you get people that talk about these events. You get people that stream the Federal Reserve decisions, right? Like, after, one of the examples of this is like after the AMC GameStop craziness, where you had a lot of meme influencers, for lack of a better word. You had a bunch of people that covered AMC and GameStop, and then those niches, like, kind of went down a little bit. Like, they stopped getting as much attention and views because essentially AMC failed. After that, you had a lot of AMC, GameStop YouTubers that tried to kind of pivot to cover economics, right? But what they would put out was just kind of nonsense. Like, they didn't really understand it. And so they would start covering the Fed meetings and like not really understanding what any of it meant, just to kind of piggyback off of it. And so I try to tell people what it actually means, right? Like, what is a rate cut? It's cutting short-term interest rates. Eventually, there's a lag to it. It doesn't happen immediately. Eventually that trickles into long-term rates. There's a lot of nuance behind it, but it's not super complex. Like, you can understand it. Hopefully the way I describe it helps you understand it, because it makes sense. You'll understand what it all means, and you'll be able to interpret the economic data that we cover here with more insight into what it does and why they're doing what they're doing. Appreciate the e-com info. All good, brother. All good, man. Yeah, I was always a with tests, I would just study for like an hour before the test, I was always a crammer. I would just cram information. No, I'm not talking about him, DD. There's a bunch of other, he was never really a meme person. So I'm definitely not talking about him. Yeah, AMC. I mean, yeah, I've talked about it before. Again, I'm going to preface what I'm about to say with this, all right? With this understanding here, chat. So I'm going to preface what I'm about to say with this. Like, look, I'm going to say some things that the AMC community might not necessarily like to hear. You have to get past the point where you think anybody giving you, like, trying to tell the truth, or what I find the truth to be somehow a FUD attack, where we're just spreading FUD and drama, and you know what I mean? Like, you got to get past that type of mentality, because it's a toxic mentality for that community. You have to listen to both sides. You can't just pretend everything's all sunshine and never look at the bare arguments for it. I think you have to understand both sides, right? And I think to a certain point, it's kind of like for lack of a better word, if you ever try to talk somebody out of a pyramid scheme, they get mad at you for it, right? It's easier to ignore logic and just pretend that you're about to get rich from this business opportunity instead of looking at the truth objectively. And sometimes the truth hurts, but it doesn't mean you should ignore it. But with AMC, the problem is that the standard of movies has changed. And I think this is so self-evident. I think anybody that's really looking at it honestly recognizes that the standard of movies have changed. People do not go to the movies as much anymore. That's the first truth, and that's the truth. They do not go to the movies as much as they used to. Why? Very obvious, because movies are going direct to streaming. Big movies are going direct to streaming. It also probably has to do with Netflix putting out really high quality movies from home, from streaming services, and Prime, like the new Roadhouse movie came out here at home. The other thing is that movie studios in general are being much more strict in regards to what movies they're willing to take the risk in putting it in on a press run in theaters, right? They're simply not putting as many movies out in theaters. Less movies are being greenlit for theaters in general. And movie studios overall have been a lot more strict, have been a lot more risk averse than they used to be for a lot of reasons, right? It's a lot more expensive to produce movies now because of the quality of them. Like even series like 1923, Stranger Things, Game of Thrones, the new House of Dragon series, all that stuff. It's taking years and years for a new season to come out because one of the reasons is they're waiting to greenlight the new seasons. Before, you'd get a new season every year in a lot of these shows. Now you got to wait for the studio to greenlight it, and a lot of the time they're only greenlighting it after the first season ends, and so they're much more strict. Overall, what this all means is less people go into movies. The standard has changed to where less people want to go to the movies as well. I still think people are going to go to movies. People are always going to want to go to it. It's kind of an event, a date, whatever you want to bring somebody to movies for. And so I still think we're always going to have people that do, but I think very self-evident the standard of movies has changed and that less people go, right? And so again, that's bad for AMC, of course. I think they're going to be okay. I think they're always going to be around. I just think they're going to lose margins over time. Less people go to movies is bad for them. And I think I think these things are very obvious, and the only people that don't want to look at this are people that are really super in those communities. Because again, I'm in AMC. I want it to go up, but these are very obvious things to me, at least. And I guess I could be wrong. Maybe I am wrong, but yeah, I don't think I am. All right, chat. We got 2 minutes. 2 minutes. I'm a big movie guy. I'm a movie buff. I love movies. I'm a big Tarantino guy. I love Quentin Tarantino. My wife and I were watching Django the other day. Just good movies, man. I'm a big movie guy. My daughter and I, she's like my movie buddy. She'll watch movies with me as well. But again, the standard is changing. All right, so look at the support level we drew. We're bouncing directly off of it. I don't know when I drew this level, but we're still kind of bouncing there. All right, so we are bouncing here, chat. We got 30 seconds. 30 seconds. Top movies. I like Scorsese. I like Tarantino. So I like Casino, Goodfellas, Pulp Fiction, Good Will Hunting, Interstellar. I like Chris Nolan movies as well. With exceptions. I like the old Batman movies. The Dark Knight trilogy is good. I like some Star Wars movies, although, some of the new ones are alright. I liked, there's a lot of movies. Alright, there's the opening bell, chat. Here's the opening bell. NVIDIA down to 895s. So let's watch NVIDIA here. Let's see what the NASDAQ does. The market's down so much, I typically am bullish short term because I think we're down and extended. But again, it doesn't mean we're not going to keep dropping. Oh yeah, Lord of the Rings is the best movie of all time. I agree. You know, it really is my favorite movie of all, my favorite trilogy of all time. I agree. I like Lord of the Rings. It's probably my favorite. It's up there. It's definitely top 5 for me. But I could probably put it at number 1. It's the movie that I saw it as a kid in theaters. You know, loved it. You know, loved it. My kids loved it as well. We're actually in the middle of watching the first one with my son. He's never seen it. My daughter's seen it a couple times, but yeah, Back to the Future is really good. I love Back to the Future. The Matrix had a big impact on me as a kid. Loved it. Tesla now over the volume weighted average price, 200 EMA. What about Google? Google's still at 160s. Crazy. Microsoft is falling down fast. I like Blade. I never saw the third one. I never really got into it like that. I like the first 2. The third one looked bad. I snuck in to see the second one in theaters when it came out. We told my mom we were going to go see something else, and we went and saw Blade. Google at 160s. All right, so again, market's bouncing up. Again, my bias was on the upside short term just because I thought extension was there. But let's watch NVIDIA. NVIDIA hitting $900. And if it can't break, it might reject, and this might drag the markets down. I'm trying to let things play out a little bit first before I take any risks this morning. Oh, I like the new. We went and saw the new Dune movie in theaters. The problem is I brought my 10-year-old son who has no patience and ADHD, and so he was just not fun to go watch that movie with. But it was a great movie. It was a great movie. But lesson learned: don't bring your 10-year-old to a 3-hour movie. Didn't work out well. Anyways, Nasdaq's pushing up. NVIDIA now over 900. We're watching Jpmorgan a little bit as well. Google up to 160.50s. Yeah, Godfather, great movie. Godfather 1 and 2 were great. 3 is alright. 4 is terrible. Alright, so we got this big rip up here. NVIDIA rejected at 900s though. I'm going to buy this, I guess. First position of the day since the opening bell. See if I can spike some profit from this. There we go. Boom. Scalped it. Nice little gain there. We'll take it. NVIDIA's still at 900s here. Is there a new Blade movie coming out? Oh, it is in 2025. Again, the Nasdaq's at... We're watching NVIDIA test VWAP here, though. If it breaks under VWAP, we might short it. It didn't. It held. All right, we just scalped another 15 bucks from the market, slowly grinding up our profit on the day. Again, we are day trading on Apex funded account program where they give you a demo. They test your skill. If you can pass the test, you can see it's very similar to day trading stocks. Very similar to day trading stocks. There's just no PDT rule, so I can day trade short. All right, so we're going to start shorting this now. NVIDIA just cracked under this big level, and it's testing lows. And so we're short. One contract. We're keeping it pretty light here. But again, you can see it's very similar to day trading stocks and futures. I'm day trading the QQQ price action based off of what NVIDIA is doing as well. Is what I'm basing my trades off of too. There we go. All right, so we just made a little bit from that also. Again, if you want to try to day trade on Apex in the futures market, there's no PDT in futures. Apex is one of the most legit funded programs where they give you a demo, they test your skill. If you pass the test, they fund you. And the good part is that if you lose the challenge, you're only out what you pay for it, so your risk is limited. Base one is 30, it's like 30 bucks. This is a 50K funded account that I'm trading on. It only cost me 35 bucks to get started. I had to make 3K in profit without losing 2K first. And since I did that, they funded me 50K with a 90% split. As long as I follow their rules, I get a 90% split, which is really useful because it limits my risk. But if I don't have that much money and I want to get started for cheap, I can. All right, we're going to start taking a position. We built up a cushion on the day, so I'm going to start taking a larger position here. We have 3 contracts. We'll get into 4 maybe. All right, we cut that a little bit. And again, if you want to check out Apex, here's the link. Great way to help support the channel. You can use my promo code BT. They are a sponsor. I'm biased, of course. There we go. We're taking a little bit more off here. Get out the rest there. So not bad. Not too shabby. Again, if you want to take it out, check it out. Here's the link. Again, promo code BT, beginner trading BT. They're a sponsor, though. I'm biased. Google, rip it up, breaking highs. You love to see it. I'm in Google right now. We added a little bit on the dip. Average price is 140s, though, so looks really nice. I'm seeing some bull action here, though. NVIDIA is the one that's down, but Microsoft's starting to rebound a little bit here. So Microsoft, Apple. Oh, Apple's up a lot. And I'm in Apple right now, too. I'm going to take a little bit off of here just because I'm already, like, we're up so much. I bought Apple at 160s. It's at 170s now, so. All right, so we just took, you know, a decent position off of Apple. We were up so much short term that, like, it's justifiable, I think. We bought Intel a few days ago as well. NVIDIA just cracked lows, though, Chad. So NVIDIA just cracked lows. Down to 890s. If it's Apex Gianni, you can. Oh, I still got the screen up. My bad, guys. Here. Sorry. Y'all yell at me if I do that. I might add a little bit more to NVIDIA here. We just added a little bit more. Kind of get a better price. Even though NVIDIA's cracking lows. Not NVIDIA. I mean, Intel is what we added to, not NVIDIA. Alright, we're gonna buy this. 2 contracts. We'll get into maybe 4. Maybe not. Alright, there we go. We'll add. Alright, now we're in 4. Alright, we just scalped that too. We're in 2 contracts left. Really nice bounce. Look at that. Beautiful bounce. Nice. Okay, we just made like 60 bucks there. Alright. Good open. Good scalping for me in day trading. Yeah, NVIDIA's fallen down for sure. Like NVIDIA dip. We're almost up to 135,000 subs, chat, so I appreciate the love. Thanks so much. All right, so it looks like that add on Intel is a good move because Intel just bounced all the way back up, so that's nice. We'll see if it continues up. Jpmorgan pretty flat. Look at it. We're going to put something else up just because it's flat. Apple, one of the green stocks today. Again, Apple went nicely green. Look at this. Here's Apple on the top. NVIDIA still looking pretty weak, though. Hey, thank you, Kay. Appreciate the donation, brother. So we did get a nice little pop. We're kind of flat though. Remember, it is a Friday, chat. Even with all these big bank earnings, it is a Friday. So Google bounced right at that previous closing price. Again, if you're not watching the previous close, you should. Again, we talk about this level a lot. Look at exactly where we bounced. Literally right off of the previous closing price level, directly off of that spot. I don't know what I want to do here. I guess I'll buy a little bit. See if we get a green action. And we'll try to add to it. Instead of scaling it on pullbacks, we'll scale in on green action here and not add any to it if it doesn't go up. So now we're red. Again, we're not going to add any to this one. We're going to keep our risk pretty tight. And now we're flats. So now we're down. Very small amount down, though. We're not risking a lot. If we break down anymore, we're going to cut this. There's too much risk. Watch NVIDIA, though. NVIDIA is one to watch. All right, we're going to get out. It might bounce back. We're going to just take the L. You know. Yeah, we did get an immediate bounce there, too. Huh. All right, so flat over the last few minutes here. Watch NVIDIA, though. NVIDIA is a big one to watch. Microsoft finally bouncing back. Intel is bouncing back some, too. So that's not too bad. Alright. So we did move up. So that trade would have freaking worked, but it's all good. Again, it's all good. We're just kind of hanging out. All in silver today. Yeah, thanks, K, for the dono. Appreciate it. What did our DDT end up doing? Oh, it never ended up holding. Kathy Woods AI move, 4% stake in OpenAI. So we are testing the top of this range. Look at NVIDIA starting to bounce back. Google's still up there too. Apple just making crazy good moves. Again, it's one of those things, one of the biggest nuances of the market I see a lot, man. And again, this is where you guys got to be really, really smart. If you see somebody absolutely hating on a big blue chip stock like Apple, take it with a grain of salt. Okay, most of the time they're either holding put options, they missed out on the big bull run and so they want it to fail, or whatever it is. I see this all the time. People hate on these big blue chip stocks. And again, if you're betting against the strongest companies in the world, you might be wrong. You know, again, I'm not saying Apple's not extended on the upside, but again, I gave this argument to you guys a couple days ago. Remember, I bought Apple. I got in decent size on Apple a few days ago. Right? What was my argument for it? It's down so much. It was down so much over the last 3 months. People acting like Apple is just going to be obsolete. Bro, everybody has an Apple device. They buy new ones every few years, at least. Right? And so Apple's going to be fine. Almost everybody has an Apple device. Apple's very smart. If you ask young people, right? I have a daughter, a 14-year-old daughter. If I could buy her the fanciest Samsung device in the world, she'd never use it. She'd refuse to use it. Apple, incredibly smart. With group chat, they ostracize you to a certain extent by making the text bubble a different color. And so people want to fit in, right? They want an Apple phone. They want to be able to FaceTime. They want to be able to be, fit in group chat, especially young people. And so young people want Apple devices. They do not want Samsung devices. And typically when somebody starts to use a device, they stay with it. Apple is going to be very strong into the future. It's one of my favorite stocks. And so when it dips down big, I buy the dip. Worked out really, really well. We're in at the 160s. Really good trade. Really happy with this swing trade. We took some profit this morning. I'll probably take a little bit more, to be honest, because we bounced back so fast. But I'm still going to hold some as well for future. Yeah. Again, Apple helping me today, really ripping up too. Yeah, I think, again, I think a lot of people, I think a lot of bears specifically get really emotional, right? I think a lot of them get talked into betting against the healthiest companies in the world, and the market's going to go up long term. That's an inevitable thing. The market's going to go up long term, and so for whatever reason, they get sold on being the next Michael Burry, being the next big short hero. They're calling the next big market crash, and they just get so stubborn with it that any bullish action, they get so hyper emotional about it. You see it all the time in chat, really. And again, I'm here to try to burst that bubble a little bit, chat. If you're betting against the strongest companies in the world, you're probably going to lose. And the longer you hold those positions, the greater the probability that you're going to lose, right? It's the opposite. If you're shorting something, the longer you hold a short in blue chips, the more likely you are to lose that money. And the same thing with long trades. If you're in something long in blue chips, the longer you hold that position, the more likely you are to make money. Now, it's not universal. There's going to be outliers, but understand where the true edge is in markets, and I think that's where a lot of bears get it wrong. I short, a lot. I shorted today. I made money today on the short side, but you can't be so stubborn that you just kind of ignore long-term strength, which is Apple, obviously one of the most successful companies in the world. Same thing with Microsoft, same thing with Amazon, same thing with Google. Regardless of whether people want it to be that way or not, these are strong companies. And again, if you try to bet against them long term, it's just a sucker bet. It really is. I don't know. Again, you might hear me say this and think that I'm an Apple person. I have a Z Fold phone. I have a Samsung here, chat. So I don't even have an Apple, but I have a daughter and a wife that both have Apple phones, and I could buy them the coolest Samsung. They never use it. They just never use it. Not the greatest, but profit is profit. Yeah, $40 is good. All right, so again, we're slightly uptrending right now after downtrending most of the day. Yeah, I'm reading this guy Clown's chat log. He's just sitting around waiting to disagree. He's just hella emotional, man. So again, I don't think you're going to be a net positive part of the community. You just seem really emotional. Again, my guess is he's politically biased and just kind of hyper emotional from that bias. And again, I'm not against anybody, regardless of what side you're on. But good day to you, sir. Have a great day. Michigan coming in 10 minutes. Yeah, for sure. Again, I'm probably not going to stick around for that for covering that, though. We're going to do a crypto show today, chat. And so, again, if you haven't already, yeah, for sure, Prague. Again, you got those people that are just, like, again, I don't know if it's, like, political bias where they're just so wrapped up in politics that, like, saying jobs are strong is like, oh, I can't believe he just said that, right? When really, like, jobs are strong. Like, a lot of people are working, unemployment's low. It's been like that for years. It's one of the reasons inflation is a problem right now, right? And I don't care about politics, but jobs are strong. They're objectively strong, you know, but just because you want something to look bad doesn't mean it is. And again, I don't really care about politics like that. We're just looking at economics, you know. Isn't Apple's phone already priced in? I don't know. It's hard to tell. I think long-term Apple's strong. Short-term, anything can happen. But we already took some profits, so we're good. Google testing highs as well here. Google testing highs as well. It's the internet. People will argue for argument's sake. Yeah, 100% they will. Anyways, look, I'm trading on the left side. This is Apex. This is Apex's funded account program. They give you a demo, and they test your skill. In the futures market, you can day trade short, buy market, sell market, all that good stuff. It's very similar to day trading stocks, but there's no PDT rule. So it gets you exposure to day trading. There's no PDT rule. And again, you can day trade index funds like the S&P and the NASDAQ, basically the SPY and Q price action. If you like to trade the SPY and Q, you can trade versions of them in the futures market, no PDT rule. You're not going to trade the SPY and Q directly, but you can trade the NASDAQ, which is what the Q tracks, and you can trade the S&P, which is what the SPY tracks, right? No PDT rule. You can trade gold, a bunch of other stuff. And again, your risk is most day traders lose. If you put up 5K in the beginning, you're probably going to lose 5K. That's just the reality of it. Most day traders lose. The more you put up in the beginning, the more you'll probably lose. And so one of the reasons these funded account programs work well for new traders, in my opinion, and I still think most of them are going to lose here, is because your risk is limited. You're not risking very much. You're still risking something. So it's not just a regular paper account. You're still risking something. You're still working towards something. You still have some pressure, and you have to learn to trade under that pressure. And in that regard, in my opinion, it builds your skill. But if you lose, you're only out $30-35 versus losing $2,000-$4,000 for your first account. And I think that makes it a powerful thing for new traders to learn on. And if you're good enough to pass it, right, the base one, they give you a 25K demo, you got to make 4K without, or you got to make 1,500 without losing 1,500, a 1-to-1 ratio, perfectly reasonable. If you do that successfully, they fund you 25K, 90% split. They've paid out over $100 million. So if you want to check out them, great way to learn how to day trade. Here's the link. They are a sponsor of mine. I'm definitely top 3 most biased traders in the world right now for them because they pay me money. They're a sponsor of mine. I'm biased. They pay me money. If you want to check them out, there's the link right there. Use promo code BT for the top 3 most biased trader in the world. BT. Check them out. Get you the max discount. It'll get you the 80% off plus 1-day pass if you use that discount. It's called Apex. My other sponsor today, guys, shameless plug here, shameless plug. My other sponsor today is a company called Chart Prime. It's a trading view service you can use in stocks, crypto, Forex, futures. I always try to back test this live so you guys can actually see like my real back testing. And it's not going to work every day. It's not going to work always, but you can find really beautiful moments of trends where these indicators, which again, Chart Prime is just custom trading view indicators. So it's just custom trading view indicators where they give you alerts on buying and selling. And again, it could be a powerful thing. Like what I consider you should do is check the strong signals. Here, look at the strong signals and look at how powerful these can be, right? So again, this is a 5-minute chart. So every candlestick represents 5 minutes. Look at this. Let's look at it, right? Strong signal. Look at this strong signal that showed up, hours ago. Beautiful breakdowns since then. This buy signal worked. Look at this strong signal literally show up. Beautiful breakdowns for hours. This strong signal looks like it worked as well, although I can't be for sure. This one, it looks like we broke down a little bit, although you can't be for sure. But again, back test the strong signals. Look at the strong one here. You got a little bit of a follow through. We can maybe say that one didn't work. Look at this strong one. Beautiful rip up. And so again, look at this one. We got a little follow through as well. But, and again, I can't guarantee all of the ones that I'm saying worked. But look at how accurate that is. Maybe 1 or 2 out of 5 or 6. That's pretty powerful, I think. Look at this strong one literally covering right at the bottom here. Right at the bottom. And the nice part is, like, you can back test these on a 1-minute chart, a 5-minute chart, an hourly chart, and see where they're really working. Sometimes they're working really well on a 1-minute. Like, look, the 1-minute charts look impressive here. Look, buy signal, beautiful bounce, sell signal, beautiful drop, buy signal, beautiful bounce. And this is when the liquidity is the highest, right? So if you wait for these moments here, like today, where the liquidity is super high, strong signals, beautiful dip. They just work really, really well, and you can have some really nice trend trades from Chart Prime. And again, you can use them on an hourly time frame as well. If we put up an hourly time frame, let's see, strong signal. Look at this beautiful drop. Strong signal, beautiful drop. Buy signal, beautiful bounce. Buy signal, beautiful bounce. So again, hourly time frame where every candlestick represents an hour. You can find really good moments in time in this. And so again, it's like $40 a month. You can use it with anything with a symbol on TradingView. Again, I can't guarantee you're going to make money. Nobody can. I can't guarantee it's going to work. Nobody can. Back test it yourself to see. It's $40 a month. It's pretty cheap to try out. There's the link. They're a sponsor. I'm biased. I'm going to probably go ahead and get out of here, chat. Yeah. Hope you guys have a great day. We'll see you guys a little bit later. And again, y'all have a safe and happy weekend here, chat. Y'all have a good weekend. What can you guarantee me, John? I can guarantee you I am the top 3 most handsome trader in the world right now, for sure. Definitely top 3, maybe top 2.5, I would argue. But I think I'm pushing it a little bit with that. I think I'm pushing a little bit for that. All right, look, I'm going to go ahead and cover the news, which drops in about 2 minutes, just because we're already freaking here. I'm going to cover the news, drops in about 2 minutes. So we'll go ahead and cover the Michigan consumer sentiment data, see if it moves markets. Expectations for Michigan consumer sentiment are, let me go ahead and cover it, are 2.9%. 1-year inflation expectations, 2.8%. 5-year inflation expectations. Consumer expectations expected at 77.6. The higher this number shows up as, the stronger the consumer expectations and ultimately the economy is. The lower this number is, the worse expectations and ultimately the worse economic view and sentiment there is. Consumer sentiment expected at 79. Again, higher means stronger economy, lower means weaker economy sentiment. And again, this drops in about 1 minute. We're just going to stick around and cover it. What do you guys think this is going to do? More handsome than Buffett? I don't know, bro. Buffett seems to be pretty handsome dude, I guess. Love the show. Stay authentic. We try, brother. We try, man. All right, so here's the report. 45 seconds. NASDAQ ripping over highs. So that's nice. We'll see if it continues. All right, now a big rejection here. All right, 30 seconds here. 30 seconds. And again, as soon as we end this show, we're going to go to a crypto show. So stick around, guys. We'll cover the crypto show. The biggest news in crypto as well. If it doesn't bring you to the crypto show here, chat, for whatever reason, if it doesn't bring you to the crypto show, here's the link. Just go to that link. It'll bring you straight to the crypto show. Here's the data here, chat. Here's the data. And market's down a little bit. All right, so here we go. Lower than expected almost everywhere for consumer sentiment expectations. and conditions. Lower than expected almost everywhere. 77 for expectations, lower than 77.6. Consumer sentiment 77.9, lower than 79. Conditions 79.3, lower than 82s. Right, but I think this could be an optimistic sign. The problem is inflation expectations were slightly higher, 3.1 versus 2.9% for 1 year. 5-year inflation expectations came in at 3% versus 2.8%. And so again, we did come in a little bit higher for inflation expectations, a little bit lower for consumer sentiment and expectations here, chat. So I guess this is making the market go down. Again, as soon as we close this stream, we're going to go to our crypto show. So again, we'll see you guys over at the crypto show. Yeah, Mike, we're starting that stream right now, brother. So again, we are going to pivot over to our crypto show. Again, don't go anywhere. As soon as we end the stream, it should bring you over to the crypto show. And so it should automatically bring you over there, chat. So I'll see you guys over there. And yeah, we're starting the show right now. We're going to end this stream. So I'll see you guys over there.